We'll be working our way through that over the next few days. But this morning, the story looks like this. The opening trade is basically a flat one, certainly for the FTSE 100. Barely budging at the get-go this morning, in and out of positive and negative territory. Can't quite make up its mind. Let's talk about some of the other markets as they start to get going. France is going to be the most interesting trade, I think, this morning at an index level. We are expecting some negativity. You've got the caring story to factor in, but you've also got the scope downgrade as well on the ratings front. Does that ripple through into the French banks narrative? Remember, we've got more ratings to work our way through towards the end of this week. Are we going to see some more turbulence there? So the CAC 40, as suggested, down by a little bit more than most this morning. We're down by nearly 0.5%. The IBEX is down by 0.3%. Wait for Germany to get going. In the meantime, Critty, what else is going on?
Well, as expected, you are seeing the biggest weights on the stock 600. They are all really French companies. And I think a regional story is more kind of clarifying into this morning's trade than perhaps a sector one. In that Schneider Electric, for example, is trading right alongside Sanofi, right alongside even BNP. A lot of the French names, Anna, really weighing. And this feels more of a regional story.
Yeah, so as Guy's been pointing out, we saw that scope downgrade. We're also moving towards some possible action by Moody's on France on Friday. So that keeps that narrative in play through the week. We will see whether they decide to do anything with that rating. And every day, day after day, we're watching to see how that government performs and how long it can last. In terms of other sector highlights, we see energy stocks doing okay this morning. There aren't many sectors in positive territory, are there? But energy is one of them, up by 0.4%. The oil price is a little stronger this morning. Middle East tensions in focus. Also Chinese demand, I suppose. Ongoing focus on that. Retail, basic resources, both of those sectors in positive as well.
The CAC 40's only got four stocks now in positive territory. The heavyweights, Schneider, LVMH, Air Liquide, Sanofi, AXA, Vinci, Airbus and BNP Paribas. It's interesting to see some of these really big French names under significant pressure. Why is that? Is the caring downgrade rippling through into LVMH this morning? Maybe a little bit.
Yeah.
Are we seeing something on the French banks? Maybe. BNP's down by 0.5% this morning. It's interesting that actually Stellantis is adding the most points on the upside in the French market this morning, as is Renault. So both of the French car names, after being battered last week, are seeing maybe a little bit of rotation that is taking them positive this morning.
I was going to point out the banks as well. You mentioned BNP there. UBS taking a little bit of a beating. HSBC is down as well. And I'm curious what the bank read-through is here. I'm not seeing a ton of rates action, but perhaps that's the broader spillover from the French bank story into the broader one?
It can be, and the banking sector didn't do too badly during Friday's session as well, so a bit of pullback on that one this morning.
We've got Barclays out this week, haven't we? We've got NatWest this week. I think we've got Lloyds this week. So there's a bunch of European banks that are going to be worth focusing on. Europe still trades, though, at a pretty epic discount to the United States, as do most markets around the world. So what do you do with that? Well, Muddy Waters Capital founder Carlson Bock was talking to Bloomberg a little bit earlier on. He says you just got to hold your nose. US stocks are still a safer bet than the Chinese markets.
There's a Fed put. There's always a Fed put. You know, does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much. Just close your eyes and buy. Probably Mag 7.
Got to close your eyes, though. Does that make it an investment or a bet? Christian Muller-Glissman, head of asset allocation research at Goldman Sachs, sitting around the table with us this morning. Good morning.
Morning.
The discounts that Europe has to the United States is epic. The discount that Asia has to the United States is epic. Yet, you've got seasoned investors saying, You just got to keep going. You just got to close your eyes, hold your nose, whatever it is, and invest in the United States. Is that still the right way to go?
You know, I think we also overweight the US into the elections. I think tactically, but also looking a bit beyond, the US is still in a much better spot, both economically, from a policy point of view, and I think even from a corporate profitability point of view. I think one of the most important things to always keep in mind is the ROE, the corporate profitability of the US is just so much higher. And that explains a large amount of that valuation premium that it has. So if you want to be bearish on the US, it probably requires the view that ROEs will come down, which is possibly a longer-term process.
What though keeps the train kind of on the track? What keeps the US market moving higher? Is it rate cuts? Because people are calling those into question now, given the strength of the US data. Or is it you can just have your cake and eat it? If the economy is strong enough, that's great, because the earnings story is going to be fantastic. If the economy is weak, well, the Fed puts there. You've got it both ways, don't you, with the US markets?
Yeah, I think right now the important thing is to essentially recognize that we're in a different regime to the last 18 months. In the last 18 months, you had what we call the inverse Goldilocks scenario, where inflation came down and growth was actually remaining strong. So normally Goldilocks means growth goes up without inflation.
Yep.
This time the reverse. And it means it's incredibly carry friendly, it's incredibly vol anchoring, and it's good for the S&P 500 because the S&P 500, the Mag 7 in particular, they're like a carry trade. They have like recurring income, and these type of environments are very good for carry trades. They're boosting their valuations. But now we're shifting into more of a reflationary backdrop in the US. So you're essentially seeing growth take over.
So reflationary, not deflationary. Okay.
No, not deflationary, reflationary. So you see growth take over, which means you don't have bond yields go down at the same time as growth is good. So that starts to be a bit of a bumpier backdrop for US equities. But I would still say that, especially with some of the positives that could come off the US elections, which could be negative for the rest of the world, and coupled with the fact that you currently see Europe on the corporate profitability side do really poorly as well. And China has a lot of uncertainties. So I can understand why people prefer the US.
One of the bear cases for Europe is that the last couple of years have been largely expected to be late cycle in terms of the expansionary cycle, basically, for lack of a better term. What does that reflationary narrative do to the bull/bear case for Europe?
Yeah, I mean, the good news about Europe is it's not late cycle at all. So if you're worried about overheating ever again, I think Europe won't overheat. You see proper disinflationary momentum. That's great. I think we know disinflation is to some extent good for bonds and can be good for equities if growth is good. We saw that with the US. The problem is in Europe, the growth isn't good. We've just downgraded in this earnings season our top-down earnings growth forecast for this year to kind of 2%. So we were at 6% before. So you can really see that the challenge you have is that Europe has certain sector exposures, certain kind of macro exposures that are really hitting the profit side. So the disinflation is positive for bonds, but it's not good for equities.
So what does it take for you to say, from an entire regional perspective, to buy the index? What do you need to see?
I think, as we know, everything goes in cycles. So if you kind of decelerate right now, if you have like a kind of negative cycle impact, eventually you will have a turn. And we've been hoping for that for some time. You have like savings rates in Europe running at 15%. You have the global manufacturing sector being in like an 18, 19-month contraction. So the hope is that if you get lower rates, you start to see that type of trapped liquidity, that type of deleveraging, destocking cycle start to turn. But the problem always, and we've seen this before, is it's not just lower rates that are required, it's confidence. And the challenge you have in Europe and to some extent in China as well is that there's been a lack of confidence because of longer-term issues coming back on the table. You mentioned the fiscal issues in Europe. In China, obviously, there are plenty long-term issues. And that's often where policy comes back to the table and tries to generate confidence. And China already had a bit of an attempt at that. The problem is in Europe, the policy picture still seems very kind of like constrained and more focused on consolidating fiscally and not necessarily stimulating.
I'll come back to the fiscal side in just a moment, Christian. I just want to talk about the election, put that firmly front and centre, and think about the US election and what that means for stocks. Looking back at the last couple of elections, it almost feels as if stocks post the actual event find a reason to rally. So but it can be completely different and contrasting reasons. So in 2016, rallying on the expectation of lower taxes, lower regulation. 2020, rallying on hopes of more fiscal spend. These things are sort of opposed, but they can both be good for stocks. In thinking about that and the sort of day after the election and the months afterwards, what are you expecting to see?
I mean, first of all, the big problem you have is that everybody knows that issue, and I think it feels like this time around the market has pulled forward some of the relief. I think a lot of people were going a bit cautious into the election, and it seems people have been squeezed in a bit. I think generally the pattern you see is that the VIX, the kind of volatility index, picks up in the 3 to 4 weeks before. That is especially true if you include the whole sample, but there's some recessions in there. So if you take the recessions out, it picks up more if there's a prospect of a unified government, because that increases policy uncertainty. And then if you get the elections getting closer a week before or after, you start to see a volatility normalization. That volatility normalization tends to be larger if you have a divided government, because it caps the policy uncertainty.
So one thing we certainly watch then in terms of volatility is, whether we have one party in full control or whether that control is divided. What about on the fiscal side? I imagine that has an impact too on fiscal freedoms in the United States. And the IMF out with a warning today talking about global debt, public debt, rising to $100 trillion a year, and thinking that this is something that needs addressing. Do you see any sign that we see fiscal pullback in the US under either administration?
I think as of now, our economists don't expect that under either administration. And I think the important thing to keep in mind is when you think about solvency in a more philosophical way, but also for governments, is you got to ask yourself, do you think that country will be able to pay back their debt? And I think most countries globally currently have high debt-GDP ratios. The US is a very productive, asset-rich economy. So to some extent, you're kind of having the least pressure on the government to fiscally consolidate because they still have the best long-run outlook. So I think that might change. But at this point, we don't really expect the market pressure or the general pressure on the US government to consolidate fiscally to increase.
I'm going to circle right back to the volatility trade that you were talking about, that typically there is this increase going into the election. You're seeing the exact opposite right now, and that it actually feels like there's a decrease. Why is that?
I think it's the market to some extent pulling that forward. If you look at the election odds in the last 2 weeks, they've really shifted aggressively in the direction of Trump winning. And I think the odds are now 92, 93%. So the market is pre-trading that. And it's to some extent dangerous because we know these odds are not perfect. They can be distorted. But I think the market certainly seems to want to pull forward the kind of the election outcome already and fade the uncertainty.
How will the Fed react if Trump wins? And how will the market react if the Fed does react? Will the market force the Fed maybe to take a more circumspect view in terms of cutting rates after a Trump win? And what would that mean for equities?
I think we're already having a bit of a reflationary shift that started with oil and higher oil prices pushing up bond yields, and now it's shifted a bit more in this direction of potentially Trump winning and being more reflationary. For equities, that doesn't have to be the end of the world. If bond yields go up because of better growth expectations, the market can deal with that as long as it's not too fast.
Better growth expectations or higher inflation expectations?
If it's higher inflation expectations, then there's a trouble. But I think the important thing to keep in mind is there is not necessarily a direct inflationary impact from some of Trump's policies. Like, you have to consider that services sector inflation is very hot in the US, not goods inflation. So even if you do get tariffs, which might be a one-off price level shock, they might not even linger. And the Fed has already said they might look through some of those price level shocks. I think if you have a goods inflation pickup, you're coming from a very low base. You're dealing with a disinflationary global goods cycle. So that is a bit less scary. What is scary, however, is if you are easing financial conditions via boosting the equity market a lot, and that kind of makes the consumer spend more. We know that there's a huge kind of household allocation to equities in the US.
Yep.
So there's a wealth to income ratio effect. So if you boost the equity market higher and higher, the savings rate might even drop more because people feel wealthier. So I think that is to some extent a concern. And I think the market already has taken out, it seems, a lot of that risk management that has dominated the post-summer kind of Fed repricing. I think the market has already priced the front end a bit.
Great to see you. Thanks for stopping by to see us.
Thank you.
Christian Muller-Glissman, Head of Asset Allocation Research at Goldman Sachs. Little bit of a redhead crossing the screen. I just want to flag this before we get to the Core 6. Moldova approving the referendum on joining the EU by a super slim margin.
Yes, it seems they've been busy counting. They've counted 98% of the votes now, and the margin is extremely thin. Moldovans vote 50.16% in favour of EU referendums. These things often seeming to be close, and there's the result there. There were two things they were voting on Sunday in Moldova. One was their presidential election, and they seem to have backed somebody who was more pro-EU, and so that very slim approval of joining the EU would seem to fit with that broader picture.
Well, the context is also really important here in that this is a country that is very aggressively shifting where it gets a lot of its exports from and its consumer demand away from Russia towards the EU, and this is part of that decision.
And that's a very tight journey, difficult journey. Okay, Core 6 looks like this morning in terms of what we're seeing around Europe. We are seeing some weakness in French stocks this morning, and you can see that writ large here. LVMH softer, not as much as it was. Schneider down 0.7%. Elsewhere, some strength. Let's see what other single stocks we're watching. Joe, over to you.
So JDE Peets is the best performing stock in Europe today, up 13% over in Amsterdam. This is on breaking news that JAB, the investment firm, is going to buy a big stake in the Kenco coffee maker from Mondelez, the Cadbury's owner in the US. It's one of their biggest shareholders. Now, the important thing here is that the price on the stake purchase is massively above where that stock closed yesterday, hence that big gain. JDE Peet's also announcing a change in CEO, but it really seems to be this change in the shareholding that is driving that stock higher today. Then another stock moving higher in the auto space is Forvia, up 8.8% at the moment. This is the car parts maker. Had a couple of profit warnings out of that sector recently. They've given guidance today. They are saying that they're still seeing weakness in China and also the EV slowdown, but the fact they haven't actually downgraded their profit forecast is actually seeing a bit of a relief in that one today, and also lifting the big rival Valeo as well. Both of those over in France seeing decent moves higher following that statement from Forvia. Then in terms of your UK home builders, a bit of a move higher. We did actually see Rightmove data overnight showing that there was a smaller than expected rise in UK house prices in the past month. Now, some are saying that's because of the budget coming up, but probably more about the mortgage rate still being too high to get people really buying in that market. This one down the bottom here, outperforming Barrett Redrow. They have got a new overweight rating at Morgan Stanley today, which says that is the best way to trade the housing recovery when rates do come down. So that one is getting a bigger boost this morning. Then your other ratings. Now we have got Infineon, this one cut at Morgan Stanley. Now this is also actually tied to the auto sector. They say that Infineon is suffering from lower demand for chips used in the making of EVs. So that one coming down there, falling 2.0% at the moment on that one. Then in terms of insurance, Munich Re gets a downgrade. This is, as Jeffrey says, the company could face as much as 1.2 billion euros worth of claims related to Hurricane Milton that hit Florida a few weeks ago. And then finally, the one we mentioned earlier, Kering, is downgraded at Citi after 16 years at buy. Finally, Citi giving up on the buy rating on Kering, and that one slipping another 0.5%, down around 45% this year for the Gucci owner.
Joe, thank you. Joe Easton with your equities roundup. Coming up, a big week for Boeing. Striking workers are to vote on a pay deal on the same day that the struggling plane maker releases its results. We'll bring you the latest next. This is Bloomberg.
from our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Welcome back. Bit of corporate news out of France. Sanofi and CD&R making jobs commitments for France, saying that jobs will remain in the country, talking about an investment of 70 million euros in France over 5 years. I think the French government is having a press conference as well, just to lay out some of the details around this deal that has been done. Airbus is a company that's going to be reporting next week. This is my link to Boeing via France. But Boeing is going to be the story this week. So over the weekend, we get a deal that is done. It looks like the White House probably had some influence on this between the union and Boeing's management. 35% is the deal that is getting done in terms of the wage increase that we're talking about here. That's over 4 years. Is that going to be enough to tempt the 33,000 striking workers back onto the line? Or are issues like pensions still a significant enough issue to maybe get them to vote against the deal? Now, the vote is Wednesday, which is the same day as the company is going to be reporting results, which means that basically the results aren't going to be the main event of the day. Benedict Cameron, our global editorial leader in aviation, joins us now. Benny, good morning. The deal is significant. The wage increase is significant. The problem with it is that it doesn't maybe address the issue around the pension demands that striking workers are pushing for.
Yeah, you're right. The pensions were always sort of the sticking point, and it's something that the workers wanted dearly after they lost it in a very contentious round more than a decade ago. Boeing has always said, this is a red line for us. We're not going to reinstate the old pension plan. And it looks like that's still sort of their line. The latest proposal, as we laid out, 35%. To give people a sense, we came from 25. That was the original offer in September. Then we went up to 30, and now here we are at 35. There's also a couple of other sweeteners in there. There's a signing bonus. There are a couple of other improvements. So all in all, it looks like the Boeing side has moved a fair bit. Whether it's enough to get it over the line is unclear. If you take a very unscientific view of what's going on in the online forums, it looks like a lot of people are saying, let's get this done, let's vote in favor. They need 50% plus one to get this over the line. So this is probably as good as chances they'll have, but you never know.
Yes, and take us through what might happen here then, Benny, next. I mean, you've laid out how this is all very uncertain, but the workers who vote on this on the day that the earnings come out, incidentally, as Guy was saying, they have a history of not being convinced by even their own union leaders. So I suppose that's an extra unknown factor.
Yeah, you're absolutely right. So let's not get too carried away and too optimistic here, because just about a month ago, just a little over a month, both the union and the Boeing side came out with their first proposal that was backed by both sides. And they both said, look, this is as good as it gets. Let's not forget that Boeing's in a very difficult financial position. Let's vote in favor. And then the workers turn around and slam that offer and really almost unanimously turn it down. And here we are, week 5, heading into week 6 of the strike, costing Boeing dearly every day. So we're at a point where probably both sides are somewhat weary. Boeing certainly is, but the workers might also start thinking about, is it going to get considerably better, or might we just take what we have and run with it? And it might look that's the way it's going to go. On Wednesday, as you said, we have the earnings first. Those come midday over here in Europe, very early in the US morning. And then the workers vote, and the result of that won't be known until late in the day. So in some ways, Kelly Ortberg, the CEO, will be presenting these numbers with a big unknown hanging over him, because if indeed he gets the strike resolved, that'll be a big boost for him. But if he doesn't, it's back to the drawing board.
And that, of course, will have an overhang on the equity picture as well. Benny, I'm curious, when we wake up Thursday morning and see how the vote happened, what the read-through into the credit is going to look like.
So the credit rating is obviously one thing that's very closely watched. The company is one step above junk with the main rating agencies. They have said that the strike and the duration of the strike plays a major role in how they see the company. Boeing did last week manage to sort of put the first contours of a new financing package out there. They want to raise as much as $25 billion, potentially in stock and debt over the next 3 years. So they've given themselves a little bit of breathing space, but at the same time, were the strike to drag out, it would make it increasingly difficult for them to hold on to their credit rating. So really, all eyes are on this Wednesday, and you know the optimism is out there. The sort of general mood is let's get a deal done. The White House got involved over the weekend and late last week, so there's that extra element of pressure from the political side. So all the stars are kind of aligned, but you know you could say that's what we thought last time, and workers voted it down. So let's not get too carried away.
I mean, a 35% wage increase over the next 4 years, one of the biggest asks that you've seen in a lot of the labor movements across the United States. Bloomberg's Benedict Campbell, we thank you so much for putting that into context for us. Coming up, we're going to talk about another company, another man who's no stranger to that labor conversation as well. Elon Musk's promise of a daily $1 million giveaway prompts a call for an investigation. This is, of course, in light of the U.S. election, which is just 15 days away. We're going to have the latest on the campaigning ahead of the U.S. presidential race next. Stick with us. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is the opening trade. We're about 30 minutes into today's session. Interesting on the surface, seeing an unchanged movement on the stock 600, but you are seeing red in the rest of the market. Remember, we did open the market with quite a beating in the French stocks. Looks like some of those losses have been paired. Let's go to another top story we're keeping an eye on. Wall Street is betting big against the clean energy transition. A Bloomberg analysis of more than 500 hedge funds reveals they are net short batteries, solar, electric vehicles, and hydrogen, while going net long on thermal coal. Bloomberg's Tasneem Brager joins us with the story. It is, of course, our big take. Tasneem, a pleasure to have you on the program. Can you walk out, or lay out, I should say, your reporting? Walk us through why it's significant.
Yeah, good morning. So what the reporting shows us is that despite all the stimulus, so the more than 2 years of the Inflation Reduction Act in the US, which is just essentially a piece of legislation that provides tax incentives specifically for green investments, and despite the enormous legislative and regulatory framework that supports the green transition in the EU, hedge funds, so investors who care only about profits, as a group appear to be largely betting against key green sectors. So as you mentioned, specifically, our analysis found that more hedge funds are net short solar than are net long. More hedge funds are net short electric vehicles, hydrogen and batteries. And that is more shorts now than we saw, for example, in 2021. At the same time, there are more hedge funds that are net long oil, gas, and even coal, which, as you know, is the most polluting fossil fuel out there. So despite the historic stimulus packages, there's just limited appetite to invest in an investor class that focuses solely on profits.
Is this about the green story itself, or is it about the fact that actually the market got ahead of itself in pricing around the strategy, and that is why we are seeing maybe these hedge funds backing off a little bit, or is it a lack of belief in the whole process itself?
It's a good question. It's a good framing of the question. It's probably a combination of all of the above. So there was a lot of enthusiasm around the green transition, COP21 in Glasgow, and during the pandemic when, economies ground to a halt, there were emergency interest rate cuts. There was very little demand for energy, for fossil fuels. In that environment, suddenly, there was this surge in green ESG funds and ESG and sustainable investing in general. That obviously changed dramatically at the end of the pandemic when lockdowns were wound back and the economy came roaring back. Interest rates rose again. Then there was an energy crisis, which was obviously exacerbated by the war in Ukraine. Now, the situation now is that there's been this expectation since the beginning of this year that with interest rates coming down again, the green sector would bounce back, especially with all the stimulus that I just mentioned. There are a few pockets that are doing better, like wind, for example, and hedge funds are generally sort of positive grid infrastructure. But the big story now, when we speak to hedge fund managers, is the geopolitics of it all. That's simply getting in the way of having a sort of a secure bet. So the tariff wars that we see with Europe and the US in particular imposing tariffs on China and China then retaliating, the outcome of the US election is obviously going to be key in determining how all of that plays out. So we've had hedge fund managers talking to us about explicit geopolitical risks as, a key reason why the energy transition as a theme, quote, isn't working out. We had another hedge fund manager telling us that, wherever you see China, run for the hills as an investor. So that's obviously particularly true for solar. So we've got a situation where a global challenge, namely climate change, is being sort of very much, is colliding with nationalist, even protectionist, if you like, interests.
Yeah, and Tasneem, then taking a step back, where does that leave us? Because you've set out there some of the cyclical and structural drivers that took us into ESG, and then sort of we got investor whiplash from some of that, perhaps post-pandemic. What are the big takeaways then from this reporting?
Yeah, I mean, as I said, one of the big takeaways is that we've got a global challenge and a very sort of nationalist, protectionist sort of response to it at the moment. So the response seems to be, first of all, we have to wait and see what the outcome of the US election is, because obviously there is a likelihood that Trump will be raising tariffs more than a Democrat administration would. And we've also got to see, how the whole sort of price effect of extremely sort of competitive pricing coming from China affects industries in the US and Europe, and how they sort of manage to deal with the competition issues, much of which was also sort of addressed in the Draghi report. But yeah, geopolitics is a key hurdle, and that is actually one of the reasons why grid infrastructure, for example, which is seen as an area that is protected from protectionism, which is why that's somewhere where hedge funds actually are putting their money.
Tasneem, thank you. Bloomberg's Tasneem Brogger bringing us that Big Take story. You can find that full Big Take story, of course, on the Bloomberg terminal and on the Bloomberg website. A lot more detail in there. She was mentioning the risks around the US election and what we're monitoring. So let's bring in the latest on the US election now. Elon Musk says his super PAC, so his political action group, of course, will give away $1 million daily until election day to a signatory of a petition calling for free speech and the right to bear arms. The world's richest person has been campaigning for Donald Trump in Pennsylvania. Let's speak now to Bloomberg's Derek Warbank. Now, I mean, it's no secret his level of support for Trump. He's been very vocal in his support for Trump for quite a while. It seems, though, that this giveaway by Musk, Derek, is quite controversial.
Yes, it is, and thank you for having me. Look, Elon Musk is, in no uncertain terms, Donald Trump's most prominent surrogate, right? He is the voice of the aspirations of a great number of Donald Trump's fans and supporters. He is, in addition to his vast wealth, got enterprises and all sorts of faraway fun things like outer space, right? So Elon Musk is somebody who is known to sort of push the boundaries, and this is one where it could come with a little bit of hot water, right? U.S. law generally forbids paying somebody to vote, but Musk and his side think that they found a sort of workaround to that, to do a sort of sweepstakes for people who may take one or two actions that would be down the road towards suggesting a support towards Trump in critical places, right? You have to live in a critical battleground state. You have to sign a petition that broadly states that you are in favor of certain things Donald Trump is also in favor of. Does that get them around these potential legal challenges? I mean, that may be for a court to decide, but we are already hearing from some prominent Democrats that they think this is an issue that investigators ought to at least take a peek at.
Well, Derek, this, of course, to your point, brings up a lot of legal questions. But for an international audience, can you just highlight what the impact of a super PAC actually is on this race, and not to mention Elon Musk's own following on the results of this race?
Sure. The simplest version is the Super PAC allows you to donate fantastic amounts of money to the general operation of pushing towards somebody, some political outcome you might like, right? You can't necessarily sit there and say, this is a whole truckload of money designed to particularly elect this person, but it can be done in all sorts of variety of ways that kind of get you about to that point. It would be sort of like saying you can't go out and make Coke, but you can go out and make Coke Zero, right? You know, there's all sorts of vagaries in U.S. election laws that get put right up until the possible limit. So in short version, what's happening here is that Elon Musk has the ability to kind of direct resources towards his overall goal of getting Donald Trump elected president, and he is certainly putting both his money and his time where his mouth is.
Derek, great stuff. Thank you very much indeed for the update. We greatly appreciate it. We are definitely in the final countdown into the election now. Derek Warback joining us on U.S. politics. I want to take a quick look at what is happening with the price of crude this morning. So down pretty sharply last week. We bounced a little bit this morning. We're not up by much. We're up by around 0.5%, as you can see on Brent and TI. But you need to see this in the context of what we saw last week, which was certainly a move lower, a fairly significant move lower in the price of crude. Geopolitics obviously needs to be folded into what we're watching here. Israel's military is taking aim now. We understand that Hezbollah's financial arm in Lebanon, it's issued an evacuation warning to civilians. This is it seeks to hit the group's economic strongholds. The unit serves as Hezbollah's alternative banking system, allows the Iran-backed group to function in Lebanon. We've also got the hit from a Hezbollah drone near Benjamin Netanyahu's home over the weekend to factor into our thinking as well. Let's put it all together now and get an understanding of where we go from here. Joining us now from Dubai is our Middle East breaking news editor, Dana Kreisch. Dana, talk to us about the kind of what appears to be a new phase in the Israeli attack on Hezbollah.
Right. We saw Israel yesterday started airstrikes against so-called Qard al-Hassan, which is a quasi-bank that belongs to Hezbollah, and this is part of the group's financial network. This, you can imagine, a few branches here and there, but mostly in areas where Hezbollah has a strong presence, like in the southern suburbs, like in the Bekaa and in South Lebanon. And these banks are mostly used by supporters to take out loans. You can put in against gold or heavy deposits, and you can take out an interest-free loan. It's a sort of an Islamic financing arm. And also the U.S. designated that as a terrorist organization, Hezbollah, and also that financial arm in 2021, and said that supporters and more people involved in this Qard al-Hassan association are using their personal accounts to cover up billions, or actually millions of dollars that Hezbollah is funneling through the system. This is outside of the Lebanese banking and financial system, and they mostly deal in U.S. dollars. And we saw strikes, 11 strikes in Beirut's southern suburbs in less than an hour, targeting these branches that are mostly based in places like shopping centers and residential buildings.
So, Dana, so that's the activity that we're seeing the Israelis take in Lebanon. We understand the Israeli Security Cabinet met last night, and there's been a lot of talk, obviously, since the beginning of this month about whether we'd see this promised retaliatory attack on Iran. Any further news flow on that?
We're still waiting for that Israel retaliation. Israel has committed itself to retaliate against Iran. And after the drone from Lebanon penetrating Israeli airspace and reaching the private home of Prime Minister Benjamin Netanyahu, the Israeli cabinet met, and they said that they are discussing ways to respond to Iran. And now we know the U.S. doesn't want them to strike oil facilities or nuclear facilities, but it seems that what Israel is saying is that they take into account what the U.S. wants, but at the end of the day, they will do what's best for Israel. So it seems that all options are still on the table despite U.S. intervention here. And of course, the region is on edge, and so are oil traders, perhaps, about how will Israel respond to Iran's attack on October 1st.
Bloomberg's Middle East breaking news editor Dana Kreisch, we thank you so much for bringing that into context. A really crucial and developing story. We go from the geopolitics to the corporate earnings next. Coming up, software giant SAP reports earnings later. We're going to dive into a preview of what to expect next. Stick with us. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 46 minutes into a European session that shows a bit of divergence across Europe. We don't see huge moves in stocks this morning. We're waiting for some data later in the week around PMIs, the European growth story in focus. The FTSE is higher by 0.4%. The CAC is actually flat now, pulling itself back from earlier disappointment, and the DAX down 0.1%. Let's pivot to politics in Europe, because the Moldovan president, Maia Sandu, faced an unexpected setback as a referendum on joining the European Union was approved, but by a very, very slim margin. That defied pre-vote polls, which had showed a consistent majority in the former Soviet Republic, had backed accession. Joining us is Bloomberg's Bucharest reporter, Andra Timu. Andra, very good to speak to you. So thank you for coming to speak to us. So just over the border from where you are, over in Moldova, we've seen this backing then for EU membership, but with a really slim margin. Where does that leave the government in Moldova?
Yes, it was a very interesting night in Moldova the past evening, because everybody was expecting an approval for the EU referendum, and at some point there were analysts who were also predicting a potential win from the second round for President Maia Sandu, but that unfortunately didn't happen. And basically this shows that Moldovans are almost equally split between the pro-European and pro-Russians. So this complicates things, especially considering that the President Maia Sandu will face a second round with a pro-Russian candidate 2 weeks from now, so on November 3rd. And as things stand now, she does have 40 plus voter support, but she still, to win the election, she still needs to convince more voters, because she definitely needs to win the second round. The pro-Russian forces are also very powerful in Moldova. Moldova is a former Soviet republic who borders Ukraine and is home to a lot of Ukrainians now who fled the war. So it does have an geopolitical importance currently, hence the Russian intensification of its efforts to destabilize the country and to have the pro-Russian forces in Moldova play an important role in the politics there.
Andra, just for an international audience, can you explain the significance of Moldova to Russia? Why are they so adamant to have that influence?
Basically, Moldova is, from its position, it's very close to the territories in Ukraine that they control now. Plus, Russia still has a lot of troops and ammunition stored in Moldova's breakaway region of Transnistria. They also have another enclave in an autonomous region called Gagauzia, which is also pro-Russian, and for years they used Moldova's financial system to launder money. There have been several banking frauds in Moldova, so it's an important from this perspective. That's why it's important for Russia.
And remains on a knife edge. Fascinating to see how close this vote is. Andra, thank you very much indeed. Andra Timu, our Bucharest reporter, joining us on the latest out of Moldova. Let's pivot back to the earnings story, which is certainly going to be a dominant theme throughout this week. A little later on today, we're going to get earnings from the software giant SAP. I think it's now Europe's biggest tech company. Tom McKenzie joins us now ahead of these numbers. The voice in my head says the second biggest. It changes on an almost day-by-day basis.
The voices in your head, guys.
I have many. Not all of them are right. So what are we looking at here? What are the key numbers? This is a cloud story.
It's a cloud story.
And it's different to ASML, which is the other company that's vying basically for this crown.
Yeah, there's the front end, the back end, so SML making the hardware, and then on the closer end in terms of where this is in the pipeline of those AI solutions, it is front-facing in terms of where enterprises deal with AI. It's the software that you sell into these enterprise units. And we are going to be looking at cloud. What they've been doing over recent quarters, and it's proven quite effective for them, is migrating their existing customers from on-premise software solutions to in the cloud. And that's proven profitable for SAP, and that effort continues. Cloud revenues expect to increase this quarter. The estimates are for an increase of about 25%. JP Morgan says, look, this third quarter could be a little challenged because of the macro environment. Longer term, medium term, they say they're pretty positive on the stock and the opportunities around SAP. But what it talks to is a tension, no doubt, playing out in boardrooms up and down the country, in Europe, in the US as well, as to how to spend on software at a time of slower global growth, more challenged global growth. How do you prioritize your spending on software? Do you continue to buy into software that has these AI capabilities, or do you pull back on some of this in terms of your concerns about CapEx spending? So that is going to be interesting in terms of what it indicates around boardroom decisions.
Yes, I remember for a time when the AI frenzy was sort of in its earliest days, we were seeing that some security sort of tech spending took a hit as a result around cybersecurity. So we'll watch that. Any clues around IT budgets? That's really interesting. And they seem to be doing pretty well still, as you say, on this kind of structural shift from on-premise to cloud. What about the AI theme then, and how is SAP managing to tilt that in their favour?
On two fronts. In January of this year, they came out with a restructuring plan that included some job losses, but as well investing investing in AI solutions for their own business to create efficiencies, but also ensuring they're embedding AI into the software, enterprise software that they sell to their clients. They say, the CEO at the time said they're going to be spending about €1 billion over 2 years to try and embed this. They've also really interestingly invested in some of the cutting-edge AI businesses out there, like Aleph Alpha, the creator of these models in Germany, and Cohere, which is a US-Canadian effort, as well as Anthropic as well. So it's been an investor in some of these key AI names. It's also partnered with Google's cloud unit as well to offer some solutions around this, particularly on data and AI. So it is trying to be on the front foot, this business, in terms of trying to make sure that it's embedding within its own business, partnering with the right partners, that are creating these innovations. And again, it's going to be interesting in terms of the tell on that spend. So those numbers dropping after hours later today.
They mentioned Google and the partnership there. We're getting Google and Microsoft earnings next week.
Yeah.
Is this ever a precursor to what we might get from the bigger cloud players?
Well, it's going to be interesting in terms of that spend from the hyperscalers. So the question is, I mean, is it a question, really? Most analysts suggest that Microsoft and Alphabet are not scaling back that approximately $10 billion that they've spent already in terms of building out their data centers. SAP will be an indicator in terms of that enterprise demand that, of course, the likes of Microsoft and Alphabet are also playing into. So in terms of a nod to those earnings stateside, yes, this will be an indicator.
Thanks, Tom. Thanks for the update. Bloomberg's Tom McKenzie with the latest on the tech news flow that we still have to come. And tomorrow morning, we'll be speaking to SAP CFO Dominic Assam after those earnings. Tom, I think, probably having that interview in his show, 6:30 a.m. UK time. So we'll certainly focus in on that. Also tomorrow, thinking of tech themes, we'll bring you a conversation with the ASML CEO as part of the Bloomberg Tech Conference. You can watch that at 9 a.m. UK time. So a big focus on all things tech during tomorrow's programming across the board. Should we have a look at what else is ahead for the week?
There's plenty going on, for sure. Let's talk about the IMF summit, because I know this is something that Tom McKenzie was talking about in the previous hours, on the previous programming, where, of course, debt is going to be front of the agenda, not to mention some of the questions around the election as well. How does that affect a lot of the EM story? That summit beginning today. Anna was talking there about the earnings story as well. Tesla, Boeing, Deutsche Bank. It is earnings palooza, earnings bonanza. You can pick your one. I like palooza. That's what we're going to see this week and going into next week as well. But for me, it goes back to the data on Thursday and Friday, where you do have the global PMIs on Thursday and the German IFO data on Friday. I don't even know what the highlight of this week is. There's so much going on.
20% of the S&P is reporting numbers, 16 trillion of market cap.
So guys on team earnings. Anna?
Yeah, no, I'm saying, yeah, focused on that earnings story.
So I think GE is going to be, so Boeing's going to be really interesting on Wednesday, but I think GE also on Tuesday is going to be fascinating, because you're going to get some indication of how the Boeing story is affecting the supply chain narrative as well. But you've also got a lot of defense companies out of the States this week as well reporting numbers. What are they going to be saying about their demand? That's been an area that's been really interesting. So I think that there's a number of kind of key sectors that I think are going to be worth watching out for.
Will there be new things out of Tesla? I mean, we just saw that big, hyped up launch around the robo-taxi and that. So we've kind of got that out of our system. Because often when we go into Tesla numbers, analysts are saying, well, it is about the numbers, but it's also about that big picture, autonomous driving future. Well, we kind of know that bit, don't we? A little bit more than maybe we do going into usual numbers. So, yeah.
Fine. I'll lean into the earnings. Deutsche Bank, then, I guess.
It's not binary. We don't have to choose. We can do them all.
I feel like I have to. This is true. Deutsche Bank, I think the buyback story is going to be interesting with all these the banks. When are we going to see some of that dry powder for the stock?
What are they going to say about Commerzbank? What are they going to say? There's a lot of things.
Do you think they will say anything about Commerzbank?
I don't know, but that's going to be. I think that's going to be fascinating. Yeah. That's the story that's playing out in their market, isn't it?
And
I'm sure there will be questions.
And the rate story that so dominated the US bank earnings season. True. The fact that rates are going to be a little higher than we'd anticipated for a little longer than we'd anticipated.
In Europe as well, maybe not.
In Europe, maybe not so, but maybe the global story. How does that bump up against that European weakness? Yeah, that's going to be interesting.
I'd be curious to see though if there was a Orchel comment in there somewhere.
I'm sure they're watching it very carefully, and I'm sure they'll be asked about it as well. So I think that'll be an area of interest. UK banks are also reporting numbers this week, so it'd be interesting to see what they say about the budget, which I think will be fascinating as well. Tom's back in a minute.
Yes.
He can just basically stay there.
Tom's still around the desk because he's going to be anchoring The Pulse, which comes up next. That is it for the opening trade. The Pulse is up next. They'll keep you across these market moves. Feels like we're building towards the earnings stories through the rest of the week. The Stock 600 pretty flat, up 0.1%. The FTSE getting the best of the gains this morning. US futures also looking pretty flat this morning, or mixed. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Israel launches strikes targeting Hezbollah's economic strongholds in Lebanon as Prime Minister Benjamin Netanyahu weighs plans to attack Iran after a drone explodes near his private residence. In the US, Tesla CEO Elon Musk offers $1 million handouts in key battleground states as the fight for votes in the race for the White House heats up. We will bring you the latest on the election. And European earnings season shifts up a gear with some of the region's biggest companies across the banking, autos and tech sectors, including software giant SAP, set to report this week. Let's take a look at the equity markets then. A bit of a holding pattern filtering through these European equity markets after the gains, of course, stateside over the last week. 6 straight weeks of gains in terms of the S&P notching a fresh record on Friday. We build up to the earnings season, of course, plus some fresh data out of the global economy. The FTSE 100 currently up 0.3%. A little bit of downside, though, coming through on Germany. The DAX down 0.2. Over in France, the CAC 40 is off 0.2%. Some luxury names reporting later this week, which could prove, of course, significant for the French markets. Let's flip the board cross-asset then. US futures currently pointing just modestly lower at 5,903, given the run-up that we've seen. 6 consecutive weeks of gains. Bit of a breather. Euro-dollar at 108, down 0.2% right now on the single currency. Gold remaining at fresh record highs. Middle East tensions certainly part of the mix there. Central bank buying has been a factor supporting the yellow metal. Currently up 0.3% so far in the session. And Brent crude, $73 a barrel, up 7 cents in the session. Boeing pre-market ahead of their earnings later this week on Wednesday. And of course, as we get the latest details out of a potential deal between workers who have been on strike and the union has not fully supported it, hasn't given a view on this potential deal. Could be significant, though, in terms of wages up 35% over a 4-year period, but will it be accepted by the workers? That will be crucial, and that vote expected on Wednesday as well, the same day as the earnings. Currently, the stock is pointing up 3.6% on the back of the details of that potential negotiated deal on Boeing, a corporate we keep an eye on throughout this week. The show starts right now.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Wow, that's quite the
outfit
morning
you've
and welcome
got
to the
on.
Pulse. I'm Tom McKenzie
we
in
can
for
chat in real time to ChatGPT. And not only that, we can interact with it with video as well.
And I swear, like, if you look at Barrett's GPT history, it's all equations like this.
Now that you know you can do linear equations, can you
Yes.
show us something more complex?
I think so. Okay, next let's try something coding related. So let me take out a computer for this. Okay, so I'm gonna open the ChatGPT desktop app like Mira was talking about before. Okay, and to give a bit of background on what's going on, so here we have a computer, and on the screen we have some code, and then the ChatGPT voice app is on the right. So ChatGPT will be able to hear me, but it can't see anything on the screen. So I'm gonna highlight the code, Command-C it, and then that will send it to ChatGPT, and then I'm gonna talk about the code to ChatGPT. Hey, ChatGPT.
Hey there, how's it going?
Yeah, it's going really well. I was wondering if you could help me with a coding problem today.
Of course, I'd love to help you out. What's the coding problem you're dealing with?
Okay, I'm gonna share with you some code. 1 second.
Sure thing, take your time.
Okay, so I just shared some code with you. Could you give me a really brief one-sentence description of what's going on in the code?
This code fetches daily weather data for a specific location and time period, smooths the temperature data using a rolling average, annotates a significant weather event on the resulting plot, and then displays the plot with the average, minimum, and maximum temperatures over the year.
Awesome, thanks so much. And in the code, there's this function foo. Can you describe to me what the plot would look like if I had versus didn't have this function?
Sure. The function foo xy takes in a data frame x containing temperature data and a window size y for calculating the rolling mean. It smooths the average temperature, minimum temperature, and maximum temperature columns by applying a rolling mean over the specified window. With the foo function, the plot would show smoother temperature lines because the rolling mean reduces the noise or fluctuations in the data.
Awesome.
This makes...
Thanks so much. So yeah, I definitely will want to apply this function. And so I'm gonna generate the plot and then show it to you. Give me 1 second.
Absolutely. Take your time. I'm excited to see the plot when you're ready.
Yeah, so far ChatGPT has only been able to see the code, and now I'm gonna run it, and then I'll use the vision capabilities of the ChatGPT desktop app so it can actually see everything going on the screen as well. Okay, ChatGPT, I'm sharing with you the plot now. I'm wondering if you can give me a really brief one-sentence overview of what you see.
The plot displays smoothed average, minimum, and maximum temperatures throughout 2018, with a notable annotation marking a big rainfall event in late September.
Fantastic. I have another question for you. Which months do you see the hottest temperatures, and roughly what temperatures do those correspond to?
The hottest temperatures occur around July and August. The maximum temperature during these months is roughly between 25 degrees and 30 degrees, 77 degrees Fahrenheit to 86 degrees Fahrenheit.
What's going on with the y-axis? Is this in Celsius or Fahrenheit?
The y-axis is in Celsius. The temperatures are labeled accordingly, such as average temperature, minimum temperature, and maximum temperature.
Yeah. So as we can see, not only can ChatGPT help me solve very easy linear algebra equations that I need help with, it can also interact with, code bases and see the outputs of plots and everything like this going on a computer.
And that is also why we're currently continue to like U.S. equities at this juncture, despite the fact that there is a lot of uncertainty heading into election and also some concerns around valuations.
Yeah, on the uncertainty when it comes to US politics, how should investors be factoring that in, Whaley? Is there a way to mitigate some of that expected volatility? How should we be thinking about positioning around the US political risk story?
One strategy that we have seen investors do is to buy protection in the volatility market rather than getting out of their equity position because momentum is strong. So you see this decoupling between realized volatility and implied volatility, suggesting that the demand for protection after election is quite high, but the levels are still reasonably reasonable at this juncture, which is something that we're looking at. But more broadly, I would say, if you look at the polls, they are still extremely close in swing states. The betting market has been very volatile, but polls are still very, very close. So as we think about the election, we try to identify themes that are likely going to be true no matter who wins the election. And one such theme is greater fiscal trajectory, greater fiscal spend, and that supports an environment where term premium for U.S. government bonds will have to increase. 1 month ago, it was at 0 basis point, and now it's at 35 basis point. We expect that to continue to increase, reflect the greater fiscal trajectory as an inevitable direction of travel, no matter who gets in the White House.
Yeah, well, on that point, interesting to hear from some strategists at T. Rowe Price this morning, suggesting that 5% on the 10-year could be tested in the next 6 months. It sounds like we've got some technical issues, so we've lost the line to Wei Li. It happens with live TV sometimes. We'll try and re-establish that line with Wei Li, BlackRock's Global Chief Investment Strategist, on how to position in these markets, factoring US political risk, but of course, the moves lower in rates from these central banks, and certainly traders have been adjusting around that, now seeing fewer than 40 basis points by the end of the year from the Federal Reserve in terms of further cuts. Coming up with just 15 days to go, we're going to bring you the latest on the race for the White House as Elon Musk makes a surprising and controversial intervention. We bring you the latest on that front. The details are next. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
And Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Welcome back. Now, the threat of higher US tariffs has become a major talking point among European CEOs after Donald Trump said he would raise import duties if he returns to the White House. Last week, the Republican nominee said tariff, quote, was his favorite word. Let's bring in Bloomberg's Valerie Teitel for more. Valerie, how are corporate executives, particularly in Europe, are adjusting to the threat of additional tariffs from a Trump presidency, if we get that?
They do seem a lot more concerned about this word tariff. It's showing up more often in these earnings announcements that we're getting from these European companies. But I also want to note that we're seeing also goods-related sectors, think industrials, think autos, anyone exporting goods. Those have underperformed the broader market in the last few weeks. Here, I'm showing some Barclays indices. This one in white is the EU tariffs basket. The one in yellow is the EU tariffs basket as related to China. So showing some underperformance in those good-related sectors as we head closer to the election. I also want to show another chart on just how these basket of U.S. stocks that are keen for a Republican win have been outperforming a basket of Democratic stocks that would outperform on a Democratic win. These are really interesting indices. They're from Goldman Sachs, but we've seen, in the last, basically since October 1st, the Republican outperformers has really grabbed the market's eye as those betting markets show slightly more risk that Trump could be in the White House next year. And lastly, I do want to end on Bitcoin, Tom, because this is also seen as sort of a Trump trade. We know that Trump would be maybe a bit nicer in the regulatory environment when it comes to cryptocurrencies. And we've seen Bitcoin rally 10% over the last week. It flirted with the $70,000 mark overnight. It's still up over the weekend session, but down off those highs that we saw in Asia.
Okay, Bloomberg's Violet Titel on the Trump trade. Thank you very much indeed. Let's bring back in BlackRock's Global Chief Investment Strategist right now, Wei Li. Wei, I think I'm right in saying that you think the markets are getting over their skis in terms of how much and how many rate cuts they are pricing in by the Federal Reserve. U.S. politics and the fiscal expansion is part of your view on this. Where do you see the 10-year yield then? We're currently at what, 406 on the benchmark 10-year yield. Do we get 409 in fact today? Do we test 5% say in the next 6 months?
That's a great question. When we think about where the 10-year would head towards, you have to have a view around policy path, and you have to have a view around term premium that comes on top of policy path. We think on both components of 10-year yield, there is room for that to go higher. So recently, in response to stronger data coming from the U.S., markets shaved off more than one cut by the end of 2025. We think that maybe 2 more cuts could be shaved off, because ultimately beyond the current period of this inflation and inflation coming down, structural forces are likely going to push inflation higher, and we're going to settle inflation at a higher level compared to pre-pandemic levels, and that would push policy path higher. And now, Tom, you also talked about fiscal trajectory, and that is in fact why we believe over the longer term, and here I'm talking about 5 years and beyond, term premium needs to go even higher. So currently it went from 0 basis point last month to now 35 basis point, and with greater focus around fiscal divergence as well between US and Europe, for example, that supports term premium in the US trending higher to 100 basis points over the longer term horizon. So all of that should push 10-year higher, which is why we prefer government bonds in Europe, including the UK, over US Treasury long-term duration, because of this divergence in fiscal trajectory.
Okay, so that's the divergence on the fiscal trajectory, and really, really interesting in terms of the outlook over that 5-year period. Wait, when it comes to the here and now, the earnings season, what are you and the team scrutinizing? What for you is most important out of the numbers that we are getting from these corporates?
I would make a statement that kind of continues from the previous discussion around fiscal. Because of the fiscal divergence, fiscal trajectory divergence, we have seen growth in the US quite a bit stronger than Europe, and that has translated from macro to micro as well. So if you look at the last earnings season, US equity market grew 13% year on year, the last earnings season, versus European equities grow 1.7%. So there is a decoupling divergence between Europe and the US there as well. And that decoupling, that gap is expected to narrow, but with US still in the lead. So we continue to prefer US equities over European equities because of the different growth dynamics. And within US equities, we previously have gone quite concentrated in AI and tech-related related themes. We see that broadening out. The gap between Magnificent Seven and the rest of the index in terms of earnings momentum is expected to narrow too. So we like US equities now across the board as an overweight.
Okay, a broadening out in terms of the gains coming through for US equities, and that decoupling pretty pronounced with 13% earnings growth versus a little over 1% for Europe, though that will narrow, is the view from Waitlist, BlackRock's Global Chief Investment Strategist, with the insights on these markets and valuable insights as well. Wait, thank you very much indeed. To the US politics then, and the details around how things stand and the role of Elon Musk, because on US elections, Musk says his super PAC will give away $1 billion, not $1 billion, $1 million. Maybe he goes to $1 billion. We're at $1 million right now. $1 million daily, $1 million daily until election day, 15 days out, to a signatory of a petition calling for free speech and the right to bear arms. What is going on? Let's bring in Bloomberg's Kriti Gupta for the details. How controversial is this? Hello, Kriti. How controversial is this giveaway by Musk? Is it legal?
It's legal at the moment, but it's very controversial. Already you are seeing Democrats say, well, this is kind of skating the lines. And we know campaign financing has always been a hot topic in U.S. politics in general. But the way Musk is doing this looks like a lottery on the surface. It's not necessarily a lottery because it's being done through campaign financing and through this thing called a super PAC. The question around the legality of it and that condition around this petition, that's where you start to have this question of kind of duress and other legal questions. The problem, though, Tom, is that time is not on their side for the folks who are against this. We're 15 days out from the election. We also know this is something that is specific for swing state voters, so not eligibility is also a big question in terms of how much they actually get. Also, who actually wins the $1 million in terms of this daily kind of report? Do you get is it a lottery system? Is it, a name out of a hat, for example? There are a lot of questions around it that are likely to not be the priority going into an already very contentious election.
Okay, Kriti Gupta, thank you very much indeed on Musk's role in this US election, as the polls still show, of course, a very tight race, even as the financial markets increasingly bet on a Trump victory. Kriti Gupta, opening trade anchor on US politics. Thank you. Coming up, a potential breakthrough at Boeing, with the union representing 33,000 workers on strike. We bring you the latest next. Boeing pre-market is up. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Welcome back. Happy Monday. Now, Boeing shares are rising pre-market, as you can see, 3.7%. The union, representing 33,000 of the company's striking workers, has hammered out a tentative accord that includes a wage increase of 35% over 4 years. A ratification vote is set for this Wednesday, the same day as the company's earnings. Let's bring in Benedict Hummel, then, our global editorial leader in aviation, for the details. Benny and team will be very busy on Wednesday. Benny, how much does this deal then move the needle?
So if you look at the stock, there does seem to be quite a bit of optimism that this is the deal that will get them over the hump. Just to remind people, we've been in 5 weeks of continuous strike here that have really brought to a standstill production at Boeing, particularly the 737 aircraft that's so crucial to the company. And the latest offer, as he said, 35%, a couple of other sort of sweeteners thrown into that, a signing bonus, a little bit on the retirement front, and a couple of other things. So overall, pretty close to where workers wanted this to be. It's not quite at the 40% magic number that they wanted, but sort of in aggregate, probably something that will get them almost over the line, or maybe properly over the line. There has to be a 50% plus one sort of approval. That's on Wednesday. Voting will get underway as Boeing unveils its earnings during the day, and then the voting booths, as it were, will close in the evening. So it won't be until sort of in the middle of our night and in the Asian morning on Thursday that we find out whether indeed Boeing has managed to avert the strike.
How did this offer come about then, Benny?
So it came out over the weekend, bit of a surprise, and dare I say, one that sort of destroyed another weekend for us as a team, but we happily picked it up. And the offer had a lot to do, actually, with a bit of support from the White House. They came in last week, and they sent their labor secretary up to Seattle. She spoke to both parties, so some sort of shuttle diplomacy, as it were, back and forth, trying to talk to both sides. And for the workers, there was long this demand that they wanted the pensions reinstated, and it might well be, we don't know this yet, whether the other side said, look, you're not going to get the pensions back, go with what you have, and that's where we are.
Benedict Hummel, our global editorial leader in aviation on Boeing, with pre-market the shares up 3.6%, 3.5% in fact right now. Benny, thank you. Coming up, Hezbollah's precise drone attack near Netanyahu's coastal home north of Tel Aviv has stunned many Israelis. We get the latest on the geopolitics of the region. This is Bloomberg.
times in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. Now, Israel launches strikes targeting Hezbollah's economic strongholds in Lebanon as Prime Minister Benjamin Netanyahu weighs plans to attack Iran after a drone explodes near his private residence. In the US, Tesla CEO Elon Musk offers $1 million handouts in key battleground states as the fight for votes in the race for the White House heats up. We bring you the latest on the US election. And European earnings season shifts up a gear with some of the region's biggest companies across the banking, autos and tech sectors, including software giant SAP, set to report this week. To the Middle East, and Israel is discussing the next attack on Iran, a day after a Hezbollah drone exploded next to the private home of Prime Minister Benjamin Netanyahu. To dive deeper into the tensions in the Middle East, let's bring in Robin Niblett, former director of Chatham House. Robin, thank you very much for coming into the studio. So we start on the Middle East, and it seems there have been discussions at the highest level over the weekend in Israel about what the response will be, maybe the timing of that as well. We have very few details for obvious reasons. What is your expectation as to what Israel does at this point when it comes to Iran?
Well, it's taken longer for them to hit back than many people expected. After the first attack, the response was pretty swift. But this time, it's been a very measured time. Obviously, there have been discussions, as we know. Should they hit nuclear facilities? Should they hit energy facilities? Both of those do not have the support of the White House for obvious reasons, one of escalation, the other of impacting energy prices ahead of the election. So all of the talk has been about the right kind of military targets. That would be a like-for-like type of attack. And I think that's probably where we were leaning. The problem is that when you have Hezbollah seemingly targeting the Prime Minister of Israel, and Hezbollah obviously being armed by Iran, you then end up with personalization, a potential risk of a more aggressive hit. Still, my expectation would be a military strike against military targets rather than the others, simply because he wouldn't necessarily have the US support for undertaking something more significant. At the moment, Israeli forces are stretched. They're succeeding, but they're stretched at least on two fronts. If you throw in the Houthis in Yemen, they're on three fronts. If they were to get a really serious front with Iran, it becomes less predictable.
Okay, well, on one of those fronts then, the fight against Hezbollah, and that continued over the weekend, targeting a number of facilities linked to some of their economic infrastructure. Do we have clarity on what the game plan is for Israel when it comes to Hezbollah?
Look, it feels to me like they're proving themselves able to push further than they thought they would. And they're seeing this moment of opportunity, an Iranian regime that is discombobulated, I'd say, at the moment by the series of attacks, and paranoid that they might be subject to some type of pager attack like the ones that were undertaken against Hezbollah. So you've got an Iran that is on the back foot, that seemingly does not want to do with its main proxy in the region, Hezbollah. And therefore I sense that what was meant to be at the beginning a sort of cease and desist, push them back above the Litani River, which is about 20 kilometers north of the Israeli border, is now becoming maybe we can change the whole balance of power in Lebanon. If we do, I, Netanyahu, go down as somebody who not only destroyed Hamas, killed all of their top leadership, I've destroyed Hezbollah, removed that threat from the north, I've pushed Iran back. I mean, I think at the moment there isn't a clear sense, even within the Israeli leadership, of what the ultimate objective is. It is being tested, I'd say, week by week.
Interesting. This is a week-by-week testing of how far they can go. Meanwhile, there are reports that the Shin Bet head is going to Egypt, if not already there, possibly for talks, it seems, around a potential ceasefire. How far away are we, given everything that's happening on all those fronts? What is the prospect of getting a ceasefire and getting the hostages returned to Israel?
I just continue to think they're extremely low, simply because for Hezbollah to give back the hostages, in essence to surrender, would simply be an invitation to their complete destruction. And at the moment, as they're saying, and their replacement leaders have been saying to Yahya Sinwar, we'd choose martyrdom, over freedom. So I think it's highly unlikely. However, where you're at the moment, from an Israeli perspective, is you want to slow down the amount of effort and troops you're having to deploy in the whole Gaza region. You need to deploy more. If you do want to take advantage of the opportunities in the north, in Hezbollah, you're going to have to move sufficient amount of troops up there to do that push. So I think at the moment the prospects for an absolute breakthrough are low.
Okay, Robin, thank you. Stay with us. We're going to come back to you for your insights, your analysis on Eastern Europe, the role that Russia is playing in some of those ex-Soviet states as well. And on that, the geopolitics of Eastern Europe then. Over the past hour, Moldova has voted in favour of a referendum on joining the European Union. But the vote was far closer than expected. A setback then, to some extent, for the Moldovan President Maia Sandu, who also secured victory in the first round of the nation's presidential election. Let's bring in Bloomberg's Piotr Skolimowski then in Warsaw for the latest. Piotr, how significant is this referendum result for Moldova, and also what it means for the EU and Russia?
Hi, Tom. So indeed, it's a very significant referendum result. Moldova was holding a referendum on future EU membership, and the results are just in. The margin with which they approved the referendum, or the path to EU membership, was razor thin. It's 50.2% at this point, mainly due to the vote from Moldova's people living outside, so diaspora of Moldovans living outside the country itself. So clearly there is a willingness or there's an ambition to join the EU, and that path has won approval, but mainly by the people living outside. Obviously, what we have to remember is that we're talking about a very small country, 2.8 million people living in the country, very poor, former Soviet republic, wedged between Ukraine and Romania. So it has a very important geostrategic position. And before we went into this election, we saw a campaign that was marred by numerous examples of meddling from Russia, or at least that's what Moldova's leaders were saying. They uncovered various schemes of trying to buy votes, to influence the election. We heard from the EU minister who told us last week Russia spent 100 million euros just to have an impact on this election. Again, the Kremlin denies any of it, but it's a tug of war between Russia and EU here for sure in this election, and it shows how difficult it's going to be going forward for this little country in Europe.
Yeah, indeed. Well, talking of Russian meddling, Piotr, we also have the Bloomberg scoop this morning on Georgia, another Eastern European state, of course, stuck between the West and Russia, and a comprehensive espionage campaign at multiple levels carried out by the Kremlin. What are the details?
Well, indeed, it's a great scoop from our colleagues. We have to remember Georgia is holding election as well. This is happening on Saturday, where we have a party of a billionaire who's pro-Russian pitted against the forces who think this country is also sort of sliding towards Russia, rather away from EU. And the report shows that basically over the years, Russian spies were watching Georgia's government, major companies. They had extreme insight into the foreign ministry, the finance ministry, central bank, key energy telecommunication providers. They're all penetrated for reasons such as potential sabotage of a critical infrastructure. So that's been going on since 2017 until 2020. At least that's what the data is showing.
Okay, Piotr, excellent update out of the region, of course, on the results out of Moldova and looking ahead to Georgia's presidential election as well. Piotr Skolimowski, thank you for the details. Let's bring back in then Robin Niblett, former director of Chatham House. Robin, we were talking about the Middle East before. Now we switch focus to Eastern Europe. How do you think Putin responds to the result out of Moldova? They have voted by a very slim margin to join the European Union. What do you think the response will be from Moscow?
Well, I think the response will be, wow, we did a pretty good job. Two-thirds, roughly, was the polling of Moldovans supposedly in favor of becoming members of the EU in the future. And in a referendum that, after all, was about putting application for the EU into the constitution of Moldova. So it's not about actually joining. There's a long negotiation still to go ahead. But Maya Sandu was hoping that by combining it with the election, where she's quite popular, to go for a second term, she would get a big get out the vote and get some wind in the sails. Rather than wind in the sails, this has scraped through the narrowest margin. That two-thirds majority has evaporated down to a few thousand votes. So she's in a much weaker position. I mean, the EU didn't want the referendum to take place because they knew it would invite Russian interference, which it has done at an epic scale financially for the size of the country. So I think if you're Vladimir Putin, you say, tick, another bit of instability there. Now you've got a country that's, by a few thousand votes in favor of joining the EU as opposed to leaning towards the West. Okay, I didn't get it to go the other way, but let's see how the second round of the election goes. She was hoping to get through on the first round. She was at, I think, 38% to 28%. That's a lot tighter than was expected as well.
Versus someone who's been characterized as a pro-Kremlin candidate.
Absolutely, all the opposition are.
So that's really interesting, and I think one of the key words is instability, isn't it? So we watch for that in the weeks ahead for Moldova and whether they try to profit from that. Meanwhile, Georgia, we had the details on this Bloomberg scoop in terms of how Russia's been trying to meddle there. How far do you think they go in trying to bring Georgia, Tbilisi back into the fold?
Look, I will say very sadly that I think Tbilisi is being pulled away from Europe, if you want to call that, away from the EU, and closer to Russia. Ivanishvili, the sort of behind-the-scenes leader, you might say, very close to Russia, made a lot of his money there. It doesn't surprise me at all to hear, although fantastic to get the proof, that all of their systems have been penetrated. It's right close to the border. In that part of the Caucasus, in a way, it is isolated, you might say, Georgia, from the closer European Union. Now, this Moldova is next to Romania, which is an EU member. It's got Ukraine on the other side, which is fighting to be part of the EU. Georgia is exposed, and it is one of the three countries that in 2008, the George W. Bush administration wanted to do that extra push to get into NATO. I don't know if you remember then, but they called out Moldova, Georgia, and Ukraine. And the first thing that happened was then the invasion of Georgia that took place into the north, taking South Ossetia. You know, Putin was determined that he would not lose Georgia to NATO and the EU. So this is part of a long-term game. I'd say he's thinking the balance is definitely tipped in his favor on Georgia, and is maybe tipping a little bit his way on Moldova.
Okay, really smart and valuable geopolitical insights there from Robin Niblett, former director of Chatham House on the Middle East and Eastern Europe and Russia's role in terms of Georgia and Moldova. Robin, thank you very much indeed. Coming up, we're going to switch focus. Hedge funds are betting against the green transition. That is the subject of today's Big Take. That comes up next. Stay with us. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London. Now, Wall Street is betting big against the clean energy transition. Bloomberg analysis of more than 500 hedge funds reveals they are net short batteries, solar, electric vehicles, and hydrogen, while going net long thermal coal. Yes, going long coal. Let's bring in right now Bloomberg Big Takes Tasneem Broger. And Tasneem, part of the team who's written up this fantastic Big Take. You can find it on Bloomberg.com and on the terminal. Tasneem, just outline for us what you found in this reporting and why it is significant.
Yeah, good morning. So if we start with the second point first, the significance. I suppose what's interesting here is that it comes after 2 years of the Inflation Reduction Act, which is, essentially a piece of legislation that provides tax incentives to do green investments. And it also comes despite enormous legislative and regulatory framework supporting green transition in the EU. And despite all of this, hedge funds as a group, they're not looking to ideology, they're just looking into how to make money, and they're largely betting against key green sectors. So as you mentioned specifically, more hedge funds are short solar than are long. The same applies to batteries, the same applies to hydrogen, the same applies to electric vehicles. At the same time, there are more hedge funds that are long oil, gas, and even coal, which, as you know, is the dirtiest of all fossil fuels. So despite historic stimulus packages, there's just limited appetite to invest in the green transition.
Yeah, because some of those prospects, I mean, you make the argument, you could make the argument as an investor, you follow the policy, follow the stimulus, and if you were to do that on these fronts, it would lead you to investing in the transition. But that's not happening. Why is that? Why is that not proving a catalyst?
So it's a sector that's very sensitive to interest rate changes. And we saw, when there were emergency interest rate cuts during the pandemic, and there was very little demand for energy, the green sector did well. When the pandemic ended, lockdowns were rolled back, and the economy came roaring back. Interest rates rose, and there was suddenly a lot of demand for energy, with fossil fuels sort of filling a lot of the, the intermittency that a lot of renewables suffer from. And so in that environment, they've just done badly. There was an expectation early at the beginning of this year that with interest rates coming down, that would change. There would be a rebound in the green sector, but that hasn't happened. And the reason we kept hearing from the hedge fund managers we spoke to was geopolitics, and specifically tariff wars. They just don't like tariff wars. They don't like the sort of the uncertainty around this. They don't know how to trade it. That is the US and Europe as well imposing tariffs on China that are very detrimental to the solar sector, and then China obviously also retaliating. And the outcome of the US election is obviously also going to be key in determining how that tariff war plays out. So we had hedge fund managers talking to us about, if you see China in a sector of the green economy, run for the hills. And what we're left with is a situation where, climate change is a global issue, but it's bumping up against nationalism and protectionism even in the form of tariffs, which are basically just leaving a key investor sector sort of put off.
Okay, Bloomberg's Tasneem Broga on today's Bloomberg Big Take on how hedge funds are, for now at least, largely avoiding investing in the transition, in fact, shorting some of those sectors. Tasneem, thank you very much indeed. Now, elsewhere in finance, big European banks are due to report earnings this week, including Deutsche Bank, Barclays and NatWest here in the UK. Let's get more then from Bloomberg's Jenny Serrain, who, of course, with the team, follows all of this for us. What are the expectations for UK banks? Let's start there, Jenny.
So I think, you know, obviously with rates coming down, that normally spells pretty big trouble for banks. But here in the UK, a lot of these banks have set up what's called a structural hedge to kind of protect them against that. And almost every analyst we've talked to and all of the investor community is really betting that that's going to come in and really help their earnings results in the next few quarters, not just this quarter. And so I think that will be a big question mark, is, you know, how much of this is just kind of accounting magic versus real kind of earnings firepower. But at least on the UK front, structural hedge is kind of the big buzzword for the
Okay,
quarter.
we love a structural hedge. Yeah. Okay, why don't American banks do they do structural hedges?
They do not. It's a very unusual thing that European banks love to rely upon. Okay. I mean, last week we've heard from the U.S. banks that trading and investment bank kind of really came roaring back to life and surprised folks. I think that is the other big thing that we'll look for this week. So can the European banks keep up with their U.S. counterparts? That'll be a big question mark.
Okay, what are the other challenges that they could be facing?
I think, I mean, the rates coming down question mark, it kind of presents two things for them. So on the one hand, when rates were going up, these banks were really complaining that, oh man, our depositors are coming to us, they're demanding more money. So that pressure sort of goes away. But at the same time, obviously, they're making a little bit less money on the loan side. So how they navigate that, I think we'll hear a lot about cost cutting this quarter. You know, does that translate to job cuts? I think there's going to be a lot on the table that investors are really looking for answers about.
That could be painful. Okay, Jenny Serrain, thank you very much for the really great setup of the earnings season with the focus and the lens on the banking space. Jenny, thank you. Tomorrow we have, talking of the macro on the banks and central banks, we have an exclusive interview with the ECB President, Christine Lagarde. Do not miss that conversation. That is at 3 p.m. UK time tomorrow, the head of the ECB, of course. Coming up, can SAP overtake ASML to become Europe's most valuable tech firm? We're going to look ahead to the software firm's third quarter earnings and Bloomberg sit down with the ASML CEO on Tuesday after that shock cut to their outlook. That is coming up. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Taiwan's economic resiliency comes from the partnership we have with friendly countries. Domestically, we have a strong, vertically integrated supply chain. This is why we believe Taiwan can play a crucial role in the democratic supply chain. We are heavily reliant on high-tech industries, especially in the rapidly developing semiconductor sector. However, for Taiwan's economy to achieve comprehensive growth, we cannot rely solely on high-tech industries. That's why we proposed a dual-axis transformation for small and medium-sized enterprises. We aim to help our traditional industries and small to medium-sized enterprises enter the AI era. We will use government resources to assist them in adopting AI applications and integrating with this industry, allowing Taiwan's economy to grow comprehensively.
So, Mr. Premier, the U.S. is going to have an election, a presidential election. It's just weeks away. Former President Trump previously said that Taiwan took chip business from the U.S. and asked Taiwan to pay protection fees. And do you think Taiwan should continue to allow semiconductor manufacturers to, like TSMC, to build factories overseas?
Taiwan also needs to rely on advanced countries for new technologies in materials and equipment. I often say that the government has a responsibility to Taiwan's industries, and Taiwan has a responsibility to the world.
Mr. Trump also said Taiwan should increase military spending to 10% of gross domestic product, and I wonder if that's possible in your view.
Taiwan has a very large neighbor with significant ambitions toward it, so Taiwan must take responsibility for safeguarding our sovereignty and national security. In next year's central government budget, we have allocated more than 640 billion Taiwan dollars for defense. This will bring our defense spending to approximately 2.4 to 2.6% of GDP. While we cannot allocate 10% of GDP to defense in one go, we have increased the budget compared to the past. We also hope that through Taiwan's efforts, the world will recognize Taiwan's determination and provide greater support. What we're maintaining is not only Taiwan's security, but also the peace and stability of the entire Indo-Pacific region.
Taiwanese Premier Zhuo Rongtai speaking with Bloomberg's Editor-in-Chief Emeritus Matt Winkler. Now, tomorrow morning, we're going to be speaking to SAP's CFO, Dominic Assam, to discuss their Q3 earnings. That interview is at 6:30 UK time, and their earnings are out after the bell later today. Also, tomorrow, we're going to have a conversation with the CEO of ASML as well. Do not miss that conversation. Plus, DeepMind in focus as well. Stay with us. This is Bloomberg.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manus Craney, back alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Bracing for volatility, uncertainties around earnings, geopolitics, and the U.S. election keep markets on edge. A red line has been crossed. Israel doubles down on its plan to hit Iran after an assassination attempt on Prime Minister Netanyahu. And Boeing and its workers agree on a tentative deal with another vote scheduled alongside its earnings this week. Good morning, Manus. Great to be back with you.
Danny, good morning. Good to be back with you. This is the state of play. 6 weeks of gains, up 1% last week in the S&P 500, 47 records in a row. I went on holiday, and you just kept cranking them out. Red sweep fever took hold. It is 2016 redux in terms of small caps and the dollar. By the way, Goldman Sachs say you need to just get a little bit calmer about the returns that you're going to expect over the next 10 years. Those heady days of 13% maybe in the long grass. Roll it over. Have a look at the bond market. Predicted now have a 56% probability of a Trump win. And a red sweep moves to 42% from 28% on poly markets. And that has implications for the bond market, for the fiscal largesse, etc. of Trump relative to Harris. T. Rowe Price said 5%. We're going to hit 5% on 10-year government bonds. Danny, why? Because deficits flood the market with new supply. Boeing, have a look at that. Pay deal, will they vote it through? On Wednesday, the stock is up on just under 4%. The vote is set for Wednesday. Will Kelly Ortberg deliver the 35% pay deal with the unions? Good morning, Danny. I was watching you every day on holiday.
How'd I do?
You did brilliantly. Came out of the elevator, there she is. Huge screen, and she's in full techno glory, and you go, I'm on holiday.
Basically, when you're gone, Manus, my aim is just to not break anything. For you to come back and for things to be in one piece.
Perfection.
They're not only in one piece this morning, Manus. It feels like this weird sense of calm. Are we in this eye of the storm? We're going to have big tech earnings kicking off next week. You have an election in 2 weeks. Is this just the calm before chaos We're going to talk to Lori Calvasina later in the show, and I'm so excited to speak with her because she says basically the most important thing for this equity market is just to get past the election and know what's happening. That's what's important.
And this goes back to the sort of sentiment. We'll play it for you in just a moment from Carson Block, which is like hold your nose and sort of just get through it. We've got 20% of the S&P 500 reporting this week. You're going to get Tesla. You're going to get Boeing with that pay deal. But my favorite line goes to JP Morgan. This is an economy out there which is aging backwards and extending. Macro vol at a 2-year low. It's a beautiful phrase, aging backwards.
A Benjamin Button economy, if
I seek to do this every day. I seek to do this every day. Look, we're talking about the Fed. We're talking about the beginning of this cutting cycle, and investors are divided on how it might last and what is the best position. Let's take a listen to the Muddy Waters Capital founder, Carson Block. This is what he had to say.
There's a Fed put. There's always a Fed put. You know, does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much. Just close your eyes and buy. You know, probably Mag 7.
Now that is music to Maria Waitman's ears, senior multi-asset strategist over at State Street. Hold your nose and buy big tech. Why not just buy big, Mag 7? Maria, good morning to you. Is that where you are at the moment, 15 days out from this election? Hold your nose and get through it.
Good morning. Yeah, I would probably say not just 15 days, probably last 15 months, or I mean, you can take it longer. We'll have tax. That's the area of stronger earnings, and yeah, that's what investors are focused on. Yes, elections are coming, but realistically, what investors are looking for is Fed put, corporate earnings, U.S. labor market. So those are far more important than kind of political tensions.
Maria, just to take a step back, we're up 23% year to date in this S&P 500. Manis keeps mentioning how it's record after record. Even the most bullish might be surprised to know that that's where we are. But we've had basically a month of really strong data. Maria, how do you disaggregate between what is worthwhile gains and ones you want to continue on versus gains that are just so robust it gives you pause?
Yeah, I think then you're right. Kind of, in order to make sense of this market, you have to take a step back. And basically, what do we have? We have economy that is not collapsing, corporate earnings that are still positive, and we have a very supportive central bank monetary policy from pretty much every central bank in the world. So I think that kind of means that stocks need to go up.
And that is supported by the growth numbers here in the U.S. as well. You look at the Atlanta Fed's GDP revised to 3.4%, Maria, in this quarter. And then I look at European data, and it is crashing down. Again, just reinforcing you must be longer of the U.S. relative to Europe.
Yeah, no, definitely. That's definitely true. So in U.S., like you say, you have still robust growth, both corporate and economic growth, and you have very kind of aggressive central banks that wants to do everything to avoid recession. While in Europe, arguably, parts of Europe are definitely in recession. And ECB, they're cutting interest rate, but they're really not kind of pounding the table where we will do whatever it takes. So yeah, definitely preference for US over Europe.
Maria, there had been hope that China would not only save Europe, but much of EM and make Chinese equities themselves attractive again. It's this hype-up cycle where we wait for China to deliver more policy. They deliver a taste, and we say it's not enough. Maria, does the rally in China and the corresponding equities that matter with it, does it have legs?
Yeah, so what we've seen in China, which is really interesting, is that institutional investors from State Street custodial database, they are buying Chinese stocks. They're massively underweight, obviously. And they went to buy Chinese stocks on kind of first announcement. But as the kind of drumbeat of this announcement is slowing down, we see the flows is petering away. So it feels like institutional investors need more stimulus, more announcements. So far, knee-jerk reaction was positive, but you definitely need more. And what Chinese authorities really need is to get consumer to spend. And so far, we haven't seen any evidence of that.
And this is where you say the consumer is bruised by years of common prosperity. And so if you look at the cuts today, the 1-year and the 5-year loan prime rates, they're sizable. But is that enough to materially draw you in? What is it that would shift you more towards China?
I mean, we know consumer sentiment is very, very weak. So consumers have not been spending. So it has been more of a kind of, it's not like a supply problem. I mean, money have been kind of getting progressively cheaper and credit is available, but people just not spending. So it's more like a demand problem. People are not borrowing. So you can lower cost of borrowing as much as you want, but if people don't want to go out and borrow, that's a challenge. We know property market is overextended, and that's creating problems for local authorities, for people to invest. Youth unemployment is big. So those structural things, that's really difficult to address, and that will take a long time.
So, in other words, you can't buy China, Maria?
Not yet. And actually, on another point, China proxies as well quite challenged. I mean, in Europe, we all love to think about like European luxury goods had been supported by Chinese consumer for years. Again, that's really not happening. So yeah, we will be quite cautious about that as well.
Maria, this market is caught somewhere between trying to protect themselves from a contested election through to this slight mania about a red sweep. My question to you is this: how much of this red sweep narrative will impact technology? You are long technology. You've been long technology throughout the past 15, 16 months. What's the worst case scenario for you in a red sweep with tech?
I think red sweep, sweep as a risk. Yes, that's definitely true. And actually, to my mind, kind of market somewhat constructive attitude or kind of resilience in light of election is that kind of the expectation is that there still would be kind of shared power between Democrats and Republicans. And we see red sweep increasing in probability. I probably have to say that betting markets there are very, very illiquid and can be influenced by like a small number of players. So I probably, it's quite skeptical about the red sweep or any sweep for that matter. So I think the shared power is probably still the most likely outcome, and hence kind of watered down regulation.
Yeah, and those poly market things, they're just driven by whales. Really hard to get any sort of read for them. Maria, thank you so much. Maria Waitman of State Street this morning. Manis, let's get to some other top stories that are trending on the terminal this morning. Over the weekend, Boeing and its union have proposed a new agreement to help end the strike with some help from the White House. It includes a 35% wage increase over 4 years, a guaranteed annual bonus of at least 4%, and an additional $7,000 bonus if workers approve the contract.
The International Energy Agency says the global oil demand will continue to weaken due to the slowdown in China and the rapid intake of electric vehicles. The executive director told Bloomberg prices are vulnerable to some spikes, though there will be no problems with the availability of oil.
MetLife is in advanced talks to buy Pine Bridge's non-China assets. It's a deal that could be valued up to $1.5 billion. Those talks are exclusive for about $100 billion in assets under management, all of that according to people familiar. Deliberations are ongoing and no final decisions have been made.
Coming up in the show, brace for retaliation. Israeli cabinet meets overnight to discuss its plan to attack Iran. More on that next.
And Manis and I are going to be catching up with Lori Calvasina of RBC about where the risks are from the election and everywhere else. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep
Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America,
The retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
It's your Bloomberg Brief on this Monday morning. Danny Berger and Manish Krani in New York. Israel's Prime Minister Benjamin Netanyahu has met with top security aides to discuss retaliation against Iran. The meeting comes after a Hezbollah drone penetrated Israel's air defenses on Saturday and exploded next to Netanyahu's private home. Let's go now to Bloomberg's Dan Williams in Jerusalem. Dan, no one was there at Netanyahu's residency, so no one was injured. But how did this even happen? How did a drone get so close to Netanyahu to make it a possible assassination attempt?
That's an excellent question. I'm sure it's being studied very closely by Israeli military experts, experts on aeronautics, experts on the drone technology available to Hezbollah. I think it's beyond doubt that Hezbollah, certainly over the last month or 6 weeks, has really found itself on a back foot militarily, given the surprise and precision strikes on a very large scale that Israel has subjected it to. However, it has managed to adapt, and it appears to be combining drones in small numbers with smaller or larger numbers of rocket strikes at the same time in a bid effectively to spoof Israel's air defenses, to preoccupy Israel's air defenses with larger swarms of rockets, with groups of drones in the hope that one drone can get through to the target. We saw this just a few days ago with a drone that reached into northern Israel, into an army camp, and killed 4 soldiers in the mess hall as they're eating dinner. And over the weekend, as you noted, this one drone out of 3 apparently that managed to reach the residence. So very low tech, being used with a high degree of ingenuity. The Israelis say that they are racing to produce countermeasures. A minister said the other day that he expects Israel, along with the United States and China, will be one of the 3 leading countries in drone countermeasures. But for now, it appears that the Israelis have really been taken by surprise when it comes to this specific tactic.
Dan, obviously, the foreign minister said another red line has been crossed. You know, the question that goes through the mind is to what extent it can recalibrate, if at all, the response from Israel. But there's also another more pressing issue, which is the apparent leak of the Israeli attack plans at the Pentagon. Just how difficult is this for the Americans to explain away?
Israel has been very careful about not discussing this in public. I don't doubt that they're taking this into consideration on the assumption this is a genuine leak of a genuine war plan as seen by the United States. This would be a breach of Israeli security. Presumably the Israelis would be wondering if this was happenstance, if it just happened to find an interested party, or if perhaps someone within the administration chose to put it out there in order to put a dampener on Israel's preparations. Now, to my eye, from what I saw, this was sensitive information. It did not appear to touch on whatever hair trigger specific preparations Israel has for Iran. But I imagine the Israeli planners are thinking, well, if this got out, what else might already have gone out? And to what extent might it endanger our pilots? They might also be wondering if this is a time-limited leak in the sense that whoever put it out there is perhaps trying to push off Israel's retaliation against Iran until after the US election, after November 5th. So at least to neutralize any prospect of Israel's retaliation, the Iranian retaliation for that retaliation, destabilizing the region and having an impact on the US election. So a number of questions will be going around on this, but it's worth remembering that in recent events, high-profile Israeli attacks, the Israelis informed the Americans in very, very short order, very close to the actual attack, perhaps as it was already underway. That could be a sign of a lack of trust, or should we say, a very high level of information security, operational security on the part of the Israelis. Presumably they will preserve that, maybe even enhance that, should this promised attack go ahead.
Dan, it just speaks to the complicating factors behind a retaliation. Only about a minute here, but what do we understand about what that might look like?
Again, it's anyone's guess. We have the Americans signaling that they don't want nuclear facilities in Iran hit, or the lifeblood oil sector of Iran hit. The Israelis saying they will not be bound, that all prospects are on the table. I expect, they say it will be painful, it will be immediate. It may also be subtle. It may not necessarily be in Iran, perhaps assets outside Iran. I imagine that we will not see a strike on the nuclear facilities or the oil facilities, given that Israel's chief ally has come out so pointedly against that target set, at least.
Yeah, you just reflect on Eli Cohen's comments, the energy minister. No facility, military or civilian, nor any person in Iran is immune. So that calibration is yet to be fully understood. Dan, great reporting. Dan Williams in Jerusalem. Coming up this Monday morning, the Donald at McDonald's, the Republican presidential candidate, serving some Big Macs in Pennsylvania. Context matters. We'll give you the story. Good fry action.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Brief. I'm Menace Graney alongside Danny Berger in New York. Time for your front pages. This is what's making news headlines around the world. First up, you've got the Washington Post leading with the former President Trump banning the fry station at a drive-thru at McDonald's in Feasterville. That's in Pennsylvania. Now, he didn't answer any question on the minimum wage, instead promoting his unsubstantiated claim that Kamala Harris never worked at the burger chain. The restaurant was closed to the public during Trump's visit, and the motorists who came through for their fries and Big Mac and milkshake, they were screened by the U.S. Secret Service.
The highest security ever to try to get McDonald's.
Mac and fries.
I would just give up. I'd be like, I'm not going through Secret Service to get a burger. Okay, anyway, next up, Reuters has this. The Moldovan president facing a setback, even though that the referendum to join the EU was approved. The issue was it was such a slim margin. A consistent majority had been shown in the former Soviet Republic to back the accession, but when it actually came push to shove, they only approved the vote with a 50.2% majority, according to the prelim results.
That is what you call slim at the margins. Right. Bloomberg leads with the AI search startup Perplexity. It's in early talks to raise funding again from investors. Valuation price tag around $9 billion. The company is seeking to raise more than $500 million in this funding round. Perplexity, what do they do? How do they garner such a valuation? Tom McKenzie has the answers to this. Tom, this is the fourth bite at the funding cherry this year for Perplexity. Yeah. What's the potential here?
Yeah, look, Manus, their valuation, to that point, their valuation's gone from $1 billion this year to $3 billion, now potentially $9 billion US dollars. As you said, looking to raise $500 million US dollars. Interestingly, they weren't going out to investors saying, hey, we need to tap your funds. Investors went to them and said, do you have an opportunity for us to invest more? Apparently, they didn't need the extra runway, but they've taken it on. The conversations are there. They could, of course, those conversations collapse. It could lead to nowhere. But for now, what we know is those conversations are taking place with a potential valuation of $9 billion US dollars for this company that is backed, interestingly, by SoftBank, Amazon, and Nvidia, with the ambitious goal of taking on Google search, Manus.
Again, the fact that people are going to Perplexity saying, can we get a bite of this, really tells us something, Tom, about AI. What does it mean of where we are in whether this is a real cycle or a hype cycle?
Yeah, and in terms of that enthusiasm, certainly from the VC community, Danny, it is still there. And $500 million being raised by Perplexity, potentially, is nothing compared to the $6.6 billion that OpenAI raised earlier this year, with that $157 billion valuation, of course. So it shows that that appetite, particularly amongst venture capitalists, is still there. Perplexity, they've updated, they have additional services, they have the free app, they have the paid-for app. It's a search service that you or I can download onto our phones. They also have one that is more geared towards corporates and companies. It allows them now to do things, for example, search some of their internal records, if you're a customer, alongside searching the internet, so they have that capability. Also, for those looking for financial information, you can pull up things like stock prices and earnings information as well for some of their paid-for products. So they've tried to update, they're trying to get ahead of this and trying to build out more products. But to the broader point around that VC appetite for some of these AI services and platforms, it clearly is still there.
Yeah. Well, they certainly, they're moving along with the revenues, aren't they?
Yeah. Tom, thank you so much. That is Bloomberg's Tom McKenzie for the latest on Perplexity. Okay, as we take you out, just a quick look at Brent this morning, moving higher by more than 1%, also pushing yields higher. Yields and oil been closely tied these days, Manus.
They are indeed. I mean, oil did get trashed last week, down 8% in the week. We need to understand, as Dan was just saying, what is the calibration of the response to Iran? It is the question for the oil market and beyond.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny. Let's set your agenda.
Bracing for volatility, uncertainties around earnings, geopolitics, and the U.S. election keep markets on edge. A red line has been crossed. Israel doubles down on its plan to hit Iran after an assassination attempt on Prime Minister Netanyahu. And Boeing and its workers agree on a tentative deal with another vote scheduled alongside its earnings this Wednesday.
Well, it's starting out quiet this morning. How long does it last? S&P and NASDAQ futures lower. It is another day of Russell 2000 outperformance. That was the theme for last week, too. At the 6th consecutive weekly advance for stocks, the first since 2024. 47th all-time record on Friday. Pick whatever superlative you want.
Effects.
Oh, yeah, you need to unleash the trumpets, man. It's balloon drop for yields. It is a move modestly higher. Likely due to what oil is doing, your 10-year yield up nearly 3 basis points. Oil up more than 1%, 1.3% this morning. It's nudging higher after an attempted attack on Netanyahu, the foreign minister calling it crossing another red line. Gold, you can see there, also goes to another record. So that's where the action is this morning. Elsewhere, are we just in the eye of the storm, Manus?
Well, we're counting down. I mean, the whole debate that we're having around this desk is how much can you really rely on the betting markets.
Yeah.
Everybody's writing about them, but the veracity of some of those stats is pretty stunning, isn't it?
Yes, I think this is so interesting because your point is entirely correct that this market has been moving on red sweep. Last week it was small caps, it was dollar, it was crypto, all doing well because betting markets were pricing in more Trump. But this is the stat from the FT, Manus. $300 million in trades on Polymarket were done by 4 accounts, and they helped swing the bets by 10 points this month. So how much can you really read into it?
Well, look, also it's the group of people who are on those markets. I mean, if you want to understand groupthink, you just got to look at the kind of people who are actually betting on that. But then you go back and you look at Hartnett's note from Bank of America, and it does talk about a mimicry of 2016 when there was a shift. There's a shift in the thinking. There's a shift in the preparedness for the outcome. And you can't really deny that in terms of the flow. And it was, look at the banks. The banks, I mean, they've had good names, but they are just barnstorming ahead.
Yeah, it was a big week. But Manus, I really love what Lori Calvasina of RBC writes around the election. What is the risk? Let me take you to her note specifically. It's only now 15 days from the election. She writes, the thing that may matter most for U.S. equities, for 2024 at least, is simply getting past the event so that companies and investors know what they are dealing with. I'm pleased to say that Lori, head of U.S. equity strategy at RBC, joins us now. Lori, this is great because we've literally been wringing our hands around what's going to happen, how do we price it in, but you say it's just about getting to the event itself.
I think that's the major thing. Obviously, I actually agree with you. I do think that we're starting to see hedge funds in particular put some red sweep bets on. You know, I've seen small cap positioning go back close to 2016 type highs. We're seeing the dollar, regardless of what you think is moving the betting markets, the dollar is starting to move in line with the betting markets. Banks' performance has been inversely correlated with betting markets. But look, I think that we did a survey back in September that was focused on policy, not personality, but policy. And we really asked our analysts to put pen to paper and say, what's the implication for your industry outlook if we get the red sweep, the Dem sweep, one of the two winners with the split Congress? What was fascinating to me about that is that there were tilts. So the Republican sweep got a bullish tilt. The Democratic sweep got a bearish tilt. But these were very, very slight. And just to give you a sense of the numbers, I had my analysts score everything on a scale of +2 to -2. So +2 very bullish, -2 very bearish, 0 is neutral. If you're bullish or bearish, you just get to pick a 1. There are no half-point selections in this survey, even though some of them try. But the reality is when I forget the exact number, but I think under the Republican sweep, the average score for U.S. industries was like 0.38, so it didn't even get to 0.5. On a Democratic sweep, it was -0.24. So these, if you looked at it sector by sector, right, financials and energy were getting the biggest sort of endorsements of this really matters and stronger views. But outside of that, it was a lot of like neutrals, conflicting cross currents. I don't know that the policy implications, as divisive as this election is, it may just not be as meaningful for Wall Street as we think.
So look, we get a frenzy every day over whether it's the betting markets or the red sweep or another note from another house. But when you look at the nuances there has been a very aggressive move in financials, less so in energy. I think what's interesting, the question then becomes a 27% ramp in the KBW relative to a 9% rise in the energy sector says to me that there's more breadth in energy than there is left in financials. Is that a fair estimation, breaking the market down?
So, what I think is interesting, if you look, and I actually spent some time aside from the survey just looking through the policy speeches, the stuff on the campaign websites, the official policy documents they've put out. And I actually did feel like energy was one of the clearest big chasms. And if you actually look when Harris was surging in the betting markets and the polling data in August and September, what we actually saw was energy was the most inversely correlated sector with the Harris-Trump spread. So, even though it's not really reacting recently to this surge in Trump, right, I do think there was, perhaps a bit of an impact back then.
Okay.
On financials, I think it's really interesting as I talk to investors, and I think I'm in the minority on this. My analysts feel very strongly that a red sweep is positive for financials and a Democratic sweep is negative. And that really, if you look at because I made them put policy down on paper, right? I made them say exactly.
Strict.
I was actually. And a lot of it has to do with regulation. And when I talk to investors, even on the long-only side, who I think are taking more of kind of a wait-and-see long-term approach, they agree with my analysts. I will tell you, I barely found financials mentioned in any of the policy documents that I looked at. So I'm not saying there's not a real connection here, but it's just not what the candidates are really emphasizing.
So it's about getting to that date and then being able to analyze it, though. What if we get to that date and it's days after and we still don't know what the outcome is?
So I believe last time we didn't get the results official until Saturday. And the market kind of moved through that, right? If you look back at 2000, and this is the example I keep, putting in front of people, because if you look at seasonality, right, in recent decades, we followed a pretty similar pattern where we have kind of a spring sell-off, we have a bit of a pullback in the fall, and a rally after the event. Obviously, that's not happening right now with the kind of pre-election sell-off. But if you look at kind of each individual year, most year we have some version of that pattern. One year where we didn't was 2000. So we didn't actually have our typical sell-off heading into the event. It was just a year that marched to the beat of its own drummer. But we didn't actually see that get decided until I think Gore conceded in mid-December. And it got kicked up to the Supreme Court. And, they settled it a little bit before that. But we didn't get our typical post-election pop. And I don't know if that's because we didn't have the normal seasonality going in or we had sort of the uncertainty lingering after. But markets don't like uncertainty.
But this market is beating to its own drum, to its own tech drum. We even had Carson Block a little bit earlier saying, hold your nose and just buy. And that's from the arch seller in these markets. When you look at the earnings expected from technology, again, we're looking at a fairly strong earnings outlook for Mag 7, up 18% in this quarter, and double digits, 25% for next year. That is the beat of a very different drum, irrelevant almost to politics.
Yeah, and we do see that earnings are coming in pretty strong so far, although I would say some of the headline stats are a little bit squishier than the market action belies. Like I think financials have had a really good start to reporting season. We've seen their growth expectations for next year rise on consensus estimates. If you look at sort of the Mag 7, I think we still have a little bit of a conundrum there, which is earnings growth is expected to be quite strong and stronger than the rest of the market, but is also expected to decelerate from these astronomical highs that we've been at. And the rest of the market is really trying, but just can't quite, match it and overtake it. And I think that's why we have all these fits and starts and all these head fakes on this rotation trade. So we're watching that in the next few weeks, but so far the Mag 7 is holding on.
Well, to that point, you've done some really excellent work on the tie between utilities and AI at this moment, how they've almost become an AI trade. Manus and I have asked people about this, and it's almost as if they're everything to everybody. When they want it to be a defensive trade, it's a defensive trade. When they want it to be an AI trade, it's an AI trade. At what point do the two become so convoluted that utilities just necessarily has to sell off when big tech comes under pressure?
I think it's fair to assume that, it's sort of gotten caught up in this theme. So as that theme comes under scrutiny, it's going to get some extra scrutiny as well. And look, I'll tell you, we downgraded this sector recently. We'd been overweight. We went overweight back in January. We did not have AI on our bingo card for this sector at all. What we saw was that valuations looked not super cheap, but like decently cheap. And the earnings revisions were pretty strong. And the flows then started to come in over the summer. We saw a lot of passive money go into the space. Well, guess what? Now those valuations don't look quite so cheap. Many weeks when we put it out in our weekly, it's sort of in the red, so it's expensive on an absolute and a relative multiple, and the flows have started to trip up. So, for me, that was enough. We got lucky. We pulled our overweight off.
A very honest reconciliation there. When the flow changes, you change your mood. Laurie, thank you very much. Great table setting, 15 days to run. Let's see where we get to on this election. Laurie Calvasina there of RBC Capital Markets. Coming up with Danny and I, you've waited for this. Boeing sees a deal on the table with its biggest union. Will it get ratified? More on the plane maker next, right here on Bloomberg Brief. Good morning.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. The top names in tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Welcome Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
What you see in my opponent, a former president of the United States, really is, it demeans the office. And I have said, and I'm very clear about this, Donald Trump should never again stand behind the seal of the President of the United States. He has not earned the right. He's not earned the right. And that's why he's going to lose.
Well, it's getting personal now. The Vice President, Kamala Harris, they're speaking on MSNBC. We're 15 days out from the election. The Democratic nominee predicting that her rival's vulgar remarks will be what makes him lose the race. And that is still very tight, depending on which polls you look at. It is neck to neck. Joining us is Bloomberg Government's Jack Fitzpatrick. Jack, it's interesting where both candidates were over the weekend. In Georgia, obviously incredibly important. The black electorate there is a third of the eligible voters. And Trump lost this by less than 13,000 voters in 2020. What was the message in Georgia, and how important was that as a venue for Harris?
I think the part of the message was also relayed in that MSNBC discussion, talking about just the weight of the election. There's not a new message from either candidate right now breaking through that seems like it's going to tilt undecided voters in some way that they haven't already been pushed. But Harris is responding to attacks from Trump, responding to some bizarre comments from Trump recently and some vulgar comments from Trump, and essentially trying to urge voters to get out and vote. That's the stage of the campaign we're at right now, is trying to motivate your supporters, motivate anybody who might be on the fence about whether it's worth showing up to vote, and trying to hit the key battleground states, as you mentioned, in Georgia, and then upcoming Pennsylvania, Michigan, and Wisconsin, all on the list for Harris, and we just saw Pennsylvania for Trump. So just trying to connect with people and motivate supporters as much as possible right now.
Yeah, and Trump's way of doing that, going to McDonald's, putting some fries in the fryer, or I guess you put potatoes in the fryer and they come out as fries. Anyway, Jack, besides the point, we are 15 days away, as Manus mentioned, and there are basically no high-quality polls coming out from over the weekend. Just this month, Pennsylvania has had only 2 polls come out, the crucial swing state with rigorous methodology. How much do we actually understand how close this race is and where the balance of power is tilting?
We understand enough now to know it might as well be neck and neck. There is some uncertainty in the polls, so I can't guarantee the results will be as close as they look in the polls, but the polls are close enough to know that we don't know who's going to win. It's essentially a toss-up. And to be honest, at this point, a lot of additional polling between now and Election Day, when some people are already starting to cast early votes, probably would not have a huge impact on the voting averages. So unless there is a major, major event that warrants a fresh look at the polls in certain states, we pretty much know where this race is. And the bad news is, what we know is that we don't know who's going to win. It looks like a very tight, unpredictable race. Not very much could possibly happen to change that outlook at this point.
So what does the schedule look like over the next 15 days, Jack? Let's just break down this week. You look at the operation of the Harris campaign, and it is door-to-door, knocking, personalized, versus Donald Trump, perhaps vicariously via Elon Musk, offering voters sign on and you can go into a lucky draw. The logistics of this campaign are very different for both sides. So how does the week look?
Yes, we know the logistical approach of a Trump campaign because he does rallies. This is how he motivates his base. This is how he communicates. It would be surprising for him to change from his usual tactic of holding large in-person rallies in key states and sometimes in non-key states, sometimes where there's a down ballot race where he's trying to help a House candidate or something like that. Harris is a little more unpredictable. We're obviously seeing her campaign in person quite a bit. There is the question of to what extent her financial advantage can help her between now and Election Day, where she chooses to spend that cash advantage to go on TV. The swing states are obvious, but the exact strategy we don't know for just the last few weeks here in terms of how Harris can, in addition to in-person events, take advantage of her cash advantage over Trump on TV. That's one interesting, outstanding question that we'll learn.
Jack, appreciate it. Thanks for getting up early for us. That is Jack Fitzpatrick of Bloomberg Government. Okay, we're keeping an eye on Boeing this morning. Boeing shares climbing in the pre-market trade this morning, up 3.9%. The plane maker and its biggest union workers have hammered out an accord. It includes a wage increase that's 35% over 4 years. It is tentative for now. A ratification vote is set for this Wednesday, the same day as Boeing's earnings. Let's bring in Benedict Campbell, our global editorial leader in aviation, for the details. Benny, how close are we to a deal?
Well, potentially Wednesday night is when we'll find out. I mean, we'll certainly find out on Wednesday, one way or the other. But the optimism is there, and you see it in the stock. It's up quite substantially in pre-market trading this morning, and people are looking at the offer that's on the table now. 35% wage increase. We've come from 25 originally, then 30, now 35, and a couple of other sweeteners thrown into it. There's a signing bonus. There are a couple of things on the retirement front. So overall, a fairly comprehensive and, dare I say, attractive package, and sort of the unscientific view from the online forums shows that there are actually more people now who are pro than might have been previously. Previously, the mood was very much, let's fight this out, let's stay in the race until we get something that's substantially better. Now we're getting more voices from workers saying this doesn't look so bad. So on Wednesday is when we'll get the vote. That'll happen while the company reports its earnings, so it'll be a very long and potentially tumultuous day for Boeing. So the earnings come out first, then the vote, and then the result of the vote is in the evening on the West Coast, so that'll be in the middle of the night over here, and Thursday the Asian morning. So we're talking at sort of looking at 24 hours of pretty comprehensive action on the Boeing front.
Well, it's only going to be a piece of theatre for the CEO, Kelly Ortberg. The chances of success, Boeing has gone directly to the unions. They've made a couple of overtures in the past, and of course, a spectacular failure of negotiation last month. How do we rate the chance of getting this over the line?
It's actually looking pretty good, and there's a number of things going for a positive vote this time. Number one, we've had the White House involvement now. That's a sort of a new nuance that's come in. Previously, the White House, at least as far as we could tell, was staying out of it, but last week there were some movements. The Labor Secretary was in Seattle and was speaking to both sides. President Biden sent a statement over the weekend saying he believes in this kind of collective bargaining agreement, and there's generally probably a sense of fatigue out there in terms of getting this over the line, so it's looking pretty good right now, but we'll see on Wednesday.
Well, the cash burn has been considerable, hasn't it? The free cash flow, $1.3 billion. Benny, thank you very much. Benedict Campbell there. Tracking the Boeing story. We'll have more of that through the morning and the next couple of days from New York and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching the close.
Get ahead of tomorrow's trading with The Close, weekdays on Bloomberg. Context changes everything.
Monday morning Bloomberg Brief. We're back together, Manus Craney, Danny Berger in New York. Keep calm and buy U.S. stocks. Carson Block's betting on some of the biggest names in the S&P 500 will benefit from retirement fund inflows. Let's take a listen to an exclusive interview with the Muddy Waters founder and CIO.
There's a debate as to what really drives, when you talk about the U.S. market, especially the S&P 500 or the Mag 7. I'm in the camp that, although I don't have the facility with math to really try to prove this out, but I'm in the camp that believes that what drives that index are flows. And so at the end of every month, U.S. workers, a lot of them, their paychecks go into their 401ks, which are retirement funds, and there's a robo bid for these stocks. And what happens is, you reduce the effective supply of stock because you're taking out the active owners of stocks that will decide, hey, at this price I'm a seller, at a lower price I'm a buyer, and you're replacing that with a holder that will never sell unless and until it has outflows because people are drawing down the retirement accounts. So according to that view, as long as the labor market is reasonably strong in the US, which it is, you're not going to see outflows. You're just going to continue to see inflows, especially in those, in the most heavily weighted names in the S&P 500. So I have, in the past few years, I have looked back on my career as an activist short seller and, kind of done the math and felt like, well, I probably could have just been levered long the S&P 500, deferred my taxes, and gone through a lot less BS, and be in more or less the same position financially. So, I mean, that does make the market more fragile, but there's a Fed put, there's always a Fed put. Does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much, just close your eyes and buy, probably Mag 7.
That was the Muddy Waters Capital founder and CIO Carson Block speaking exclusively to Bloomberg's Haslinda Aman. How many people feel this way, Manus, that there's so many risks between an election, a Fed, geopolitics, yet sentiment has been off the charts, and the S&P 500 keeps hitting new highs?
I think it goes back to what Laurie Calvasina said. It's sort of, you get through this election, stocks, the bias, everybody's saying, the negativity, if there's a Harris victory, etc. It's perhaps a little bit overstated. And likewise, on the red sweep, a little bit overstated on the upside. But Carson Block, I mean, there's an admission for you. For the art short seller, to say to the world, do you know what? I should have just, maybe bought the Mag 7.
Yeah, not a ringing endorsement for active management necessarily. No. Okay, Manus, let's quickly set you up for this week. We're going to have the IMF and World Bank kicking off its annual meeting in Washington today. Tuesday, ECB President Christine Lagarde sits down with Francine Lacqua for an exclusive interview. Wednesday, it is Tesla and Boeing. So, Manus, if you're looking for more risk events to spice things up this week, you got plenty.
We got plenty. Let's see what Lagarde's got to say. I mean, you just look at some of those growth numbers out of Europe, and they're pretty tragic on the way forward. We're back together. We're reunited. We're going to take you all the way to the U.S. election on Bloomberg Brief every day, yeah?
We'll do our best.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Financial conditions are incredibly loose.
The market in fixed income is definitely volatile.
Equity volatility, for the most part, has been low.
It can look a certain way at the index level, but there's opportunity under the surface.
I don't feel bearish by any stretch, but valuations feel full.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
These weeks are absolutely flying by. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now as we kick off a brand new trading week on the longest winning streak of the year so far on the S&P 500, following a 6th week of gains on the S&P just last week after closing at another all-time high. Equity futures on the S&P 500 shaping up as follows, pulling back by about 0.1% on the Nasdaq 100. We're down by around about 1/3. The Russell of small caps just about unchanged. Your week ahead looks like this. Look out for the beige book and the beginning of the IMF World Bank meetings. Why? Because there is a big divide emerging between the United States and the rest of the world. Just listen to the commentary over the weekend. Apollo, no landing continues. UBS, a no landing US economy. And Bank of America considers the other R word, Lisa, reacceleration.
So here's the question. How much can the U.S. reaccelerate, especially as you point out that huge divide between the U.S. and Europe, very much in focus at the IMF? It's the reason why I think a lot of people are going to be talking about the deficit in the IMF and the possibility of yields going higher. You've already heard that overnight with a number of different analysts, including T. Rowe Price, talking about 5% 10-year yields. But now the question comes to what is the consequence of a reacceleration other than just people liking U.S. assets?
We talk about those 5% 10-year yields in a Treasury market and just the sound of people leaning a little bit more heavily into the so-called Trump trade. Note after note, and again this morning from Mike Wilson over at Morgan Stanley.
So here's the question, and I actually was reading a lot about this weekend. What is the Trump trade? People are talking about it being the financials. People are talking about it being the yield curve steepening. People are talking about how you get small caps that are rallying, and that's all part of it. At the same time, it's unclear what will actually be the Trump trade after the fact and how much of the odds change. But this seems to be the real question right now as we've reached the final stretch heading into the election.
It almost feels like there's two Trump trades. There's one in the betting markets, which Trump is handily winning, and many people are speculating is there some sort of whale in the markets. And then there's actually the financial markets. And you brought up Wilson and his point. He says markets appear to be rotating more towards Trump with a scenario over the past several weeks. Equity market leadership has looked more like 2016 election playbook. Meanwhile, bonds have sold off and several precious metals and cryptocurrencies have continued their upward momentum, especially when it comes to the likes of something like gold.
Bonds are selling off again this morning. Yields are higher at the front end of the curve on a 2-year by 4 basis points, on a 10-year up by 3 or 4, supported by the move in oil. Terrible week last week. Crude was down by around about 8%. It's bouncing back this morning. We'll build on that a little bit later. I want to talk about a single name this morning. It's Boeing. Do we finally have what might look like a deal over at Boeing? That stock is higher by 3.9%. The offer on the table, it's a big one to be fair, a wage increase of 35% spread over 4 years.
But we have a deal almost tentative. Why? Because in September, when the leaders of the union and Boeing reached an agreement, it was overwhelmingly rejected by the 33,000 union workers. They said, no, this doesn't go far enough. So it's a tentative agreement. It was struck over the weekend. The most interesting aspect of this, I think, is when this potentially could be or not be ratified. And that's Wednesday, Lisa, after they come out with earnings earlier in the morning.
Yeah, October 23rd, right? This idea that suddenly all of the union members get to vote on this and the union leaders have not endorsed it. They haven't said you should sign off on it because of some of the pension issues, because of some of the benefits on the other end. It just really goes to show that Boeing's 41% decline has been a drip, drip, drip down. Unclear if this can really stave that off.
And this is a small bounce in the context of that big drip lower. We're up by around about 4% in the pre-market this morning. Equity futures pulling back, as I say, just a little bit. We're down by about 0.1% on the S&P 500. In the commodity market, we'll build on this later. Crude back through $70.36. We're higher by 1.65%. Coming up this hour, your lineup looks like this. Dan Morris of BNP Paribas following 6 straight weeks of gains on the S&P 500. Stephen Cook of the Council on Foreign Relations as Israel hones plans to attack Iran. And Nina Richardson of ADP on why a boring economy is the best kind of economy. We begin this hour with stocks sitting near record highs after posting their longest weekly winning streak so far this year. Traders looking ahead to a busy week of quarterly results. Dan Morris of BNP Paribas writing, US earnings are driving outperformance of the equity market. Still early in the season, but results are encouraging. Risk, if anything, is that growth is too strong and the market is too optimistic on the path of rate cuts. Dan joins us now for more. Dan, welcome to the program, sir, as always, and good morning to you. Do you think there's too much of a good thing going on right now, then, in the US economy?
Well, we probably should enjoy it while it lasts. We know that bad things inevitably happen. We'll have some type of negative surprise, and it won't be another 6 weeks or 6 months of continued gains for the market. But broadly speaking, if you look at the environment, at least in the U.S., it is pretty encouraging. Stocks reflect that. We believe we're on a path to a soft landing. Rates are going down. We can discuss all day about how quickly that's going to happen and when the cuts are going to take place. But for now, we're kind of waiting for what that negative shock might be, but the economy does look resilient.
Dan, you say soft landing. UBS says clients are asking us about a so-called no landing. What's the difference between a soft landing and a no landing? And how, from your perspective, does your approach to capital allocation decisions shift with either in mind?
Well, I think my interpretation of a no landing was that you actually don't get growth back to the long-run average for the economy in the U.S., which would be, say, 1.75%. And clearly, we're well above that now. The last I checked, the Atlanta GDP now forecast from the Fed was 3%. So, we've quite a ways to go. And that's where we get into the dynamic of how quickly the Fed is going to actually cut rates if growth stays that strong. So I think that's going to be the dilemma. That's where perhaps you have some mispricing in the market. Too much optimism on the rate front, but from an equity point of view, that's not per se such a big problem.
At a certain point, though, Dan, you have to wonder about whether the earnings ratify this sort of no landing scenario. And a number of different strategists pointed out that we have seen downward revisions to some of the forward-looking projections, particularly for some of the cyclical companies. How much does that raise concerns about you as we parse through the earnings of the likes of auto companies later this week?
Well, Lisa, I think the key thing to keep in mind, I mean, revisions clearly are important. Positive revisions are better than negative revisions, but we want to look at the absolute earnings growth that we think we're going to get. So even if you have negative revisions, but earnings are up a year from now, really the market should be up as well. So you want to keep it in perspective. Kind of inevitably, analysts tend to be too optimistic, so they revise down those estimates. But if there's growth behind it, that's going to be what matters.
Dan, how much are you trying to understand what the Trump trade is, what the Harris trade is, and how to really game that out at a time where maybe earnings matter, maybe the Fed matters, but right now all the oxygen's been sucked out of the room for the next 2 weeks?
Well, to some degree, at least over the next 2 weeks, argue perhaps the opposite. I think the election outcome is so uncertain. I think it's challenging for a lot of investors to think about how they would try to play an outcome, particularly when what honestly I think is going to matter at least as much, if not arguably more, is what happens in Congress, because that determines what the victor will be able to do. If it's divided Congress, clearly you have much more limited scope. If there's a sweep either way, and really anticipating that now, I think it would take a quite brave person.
Daniel, given that, the fact that we need to know the composition of Congress, and also the fact that if you look at these swing state polling, they're on a knife's edge. It's 50-50. It's a coin flip when it comes to this election in 2 weeks' time. Why do we see the markets rotating, though, towards a Trump trade?
Well, I guess, as you pointed out, it all depends how you interpret it. I guess our focus is more on the medium-term outlook for the economy, and really under kind of any scenario you think you have for the results of the elections, it is still a quite positive outlook. Now, there's going to be difference on maybe what sectors do well or worse, depending on the configuration. But at a high level, we're optimistic, if you will, and have our overweight in equities in the U.S.
So basically what you're saying is regardless of the U.S. election, compared to the rest of the world, especially when you look at what's going on in China and the data there and Europe, the U.S. remains in this exceptionalism realm.
Really, it is hard to find another major economy right now that can match the performance of the U.S. We'll see how long that lasts, but for now, at least, it does seem to be on a pretty positive trend.
Hey, Dan, it's good to hear from you. As always, Dan Morris there in London of BNP Paribas, the so-called Trump trade. It's super, super difficult to disentangle what is driving this market at the moment. Is it the so-called Trump trade? Is it the economic data? Is it a mix of both? Let's take the financials. Financials are doing nicely, but you could say that's all about the earnings. Let's take the Treasury market. It's been selling off, yields are high, but you can say that's all about the economic data. It's very difficult to disentangle what is what and what it isn't.
There was a whole Wall Street Journal article over the weekend trying to disentangle this. And basically for every single company or set of companies that was rallying or selling off, you could come up with a logical explanation in the market. You could also point to a real continuation of what we had seen before the betting markets really changed. So when you start parsing through this, how much, like Dan, are people saying, actually, we're focusing on the fundamentals because good luck if you really want to bet this out, and how much are people actually trying to delineate what could potentially win?
The fundamentals don't change in terms of potentially the U.S. being the cleanest of the dirtiest shirts. And Jonathan, you talked about this yesterday. Regardless, the walls seem to be going up around the world. And if you want to do business in America, you might have to come into America under either administration, but especially under the Trump administration. What I find so interesting about this is what Daniel's point was. How do you put on these bets when it's not just the White House that's up for grabs? You don't know the composition of Congress. You don't get a 15% corporate tax rate if you have a democratically controlled Congress. So this is what is so challenging about the election in 2 weeks.
If you get a red sweep in 2 weeks' time, it's not a base case for many of you, but if you do, you can imagine 10-year yields moving 50 basis points in 2 days. If you've got that kind of sweep. Why? Because all of the promises on the campaign trail
the fact you're going to extend the tax cuts and throw in even more tax cuts on top of that, the Federal Reserve's going to have to back away. It won't just be the long end. It'll be the front end too.
So here's the question. I think that that's astute, and I think that that's accurate. I think the question is that going to be bad for stocks or good for stocks? And we've really talked about, what is that threshold at a time where yields used to be a potential liability if they got too high for equity valuations? Is it still that way? If the reins are released and you still have tax cuts and you have a whole host of other deregulatory actions, these are some of the questions that people have, and you can't answer them, which is the reason why a lot of people are saying, la, 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 la.
Yields are up 4 basis points, and we'll be saying that until 2 weeks' time. 15 days to go. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. Speaking of those just 15 days to go, VP Harris is leading Donald Trump in fundraising. Filings show that the Harris campaign raised $221.8 million in September. That's more than 3 times the amount raised by the Trump campaign. The latest Real Cleo Politics average of national polls shows that the race is still neck and neck, with Harris leading Trump by just 0.9%. Elliott Investment Management and Southwest Airlines may be heading towards a truce. According to people familiar, the two are discussing a potential settlement to avoid a proxy fight for control of the airline's board. Elliott has proposed a framework that would give it representation, but not control of the board. The talks haven't been finalized and could fall through, those people familiar said. And what a weekend for baseball. The 2024 World Series matchup is set. It'll be a battle of league heavyweights with the New York Yankees and LA Dodgers facing off for a record 12th time in the World Series, but for the first time in over 40 years. Sorry, Lisa, but the Dodgers did indeed take down the Mets in their 6 games behind their high-powered offense, with superstar Shohei Ohtani heading to the Fall Classic for the first time in his career. They're going to face a Yankee team back in the World Series for the first time since 2009, with sluggers Juan Soto and Giancarlo Stanton leading the way for the New York team. Game 1 begins this Friday in LA. And that's your brief, John.
Danny, thanks for that. Appreciate it. Juan Soto, Saturday evening in Cleveland, just absolutely phenomenal. Have we got the game report?
Do you know what they call him now? Mr. Wonderful. I'm so sorry, Lisa, but the Yankees are the champions, and now they're going to the World Series. We are so excited.
Do you know why Lisa's happy? Because they didn't quite fit in the Yankees jersey then, the Yankees jacket. I think the banner was covering it up.
I'm watching the bond auctions. There's actually a 20-year on Wednesday that's coming out.
Are you wearing that for the rest of the show?
I think I should. It's more comfortable.
I totally disagree.
Okay.
Doesn't
Let's see
really
how that
match.
works out. Up next on the program, Elon Musk shaking up the campaign.
Every day from now until the election, we're giving out $1 million prize. That is, and all you have to do is sign a petition in support of the Constitution.
That conversation up next, live from New York City this morning. Good morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
All-time highs at the end of Friday's session. What's that, Lisa? Number 47?
Yeah, something like that. I don't know.
47.
I'm counting equal weight.
Still counting higher. Where are we in equal weight?
I actually don't know. I think it's 25. But we actually did last week. I just want to point out small caps outperformed, that it was still that rotation that really has been the hallmark of this trend.
That's super helpful.
Isn't it?
Thanks for that.
Anytime.
Equity futures on the S&P, a little bit softer. We're down by 1/10 of 1%. Under surveillance this morning, Elon Musk shaking up the campaign.
Every day from now until the election, we're giving out $1 million prize. That is, and all you have to do is sign a petition in support of the Constitution. It's very straightforward. You don't even have to vote.
So here's the latest. The Tesla chief saying the super political action committee he created will be giving away $1 million a day until election day to a signatory of a petition calling for free speech. Democrats are expressing concern.
I think there are real questions with how he is spending money in this race, how the dark money is flowing, not just into Pennsylvania, but apparently now into the pockets of Pennsylvanians. That is deeply concerning.
Joining us now is Jack Fitzpatrick of Bloomberg Government down in Washington, D.C. Jack, let's start there. What is so deeply concerning about it?
Well, first, Democrats can make broader complaints about Elon Musk's support for Trump. They have complaints about how he runs X, formerly Twitter. There are more specific legal concerns that I think not just Democrats, but some scholars immediately have, because in addition to the comments you just played, Musk has said this $1 million giveaway is based on an eligibility requirement of you have to be a registered voter, and that may be illegal to require people to incentivize voter registration with cash giveaways or check giveaways. So there are some legal concerns that could be really interesting that we may see play out between now and Election Day with regard to the $1 million giveaway. But that's in addition, that's kind of the icing on the cake of Democrats' heartburn over the role that Elon Musk has played more broadly in favor of Donald Trump.
Well, we saw already over the weekend, he already doled out 2 of those checks, one in Harrisburg and, of course, one in Pittsburgh. This is a must-win state for the Democrats when it comes to Pennsylvania. So what are they doing to potentially combat this, Jack?
Well, there's going to be a huge spotlight on Pennsylvania from now through Election Day. Kamala Harris is going to spend a lot of time there. I think it's safe to say she's going to be there today, in addition to Michigan and Wisconsin. The money giveaway also raises some strategic questions about what exactly the goal is here. We're close to the election. It raises awareness, seemingly, of a PAC that supports Trump. It's not something that the Trump campaign specifically is doing. So you're probably going to hear Democrats, and you heard Josh Shapiro, but you're going to hear some concerns from Democrats about Elon Musk's activities here. But the strategic response may just be more of the same. More time and money in Pennsylvania. It's kind of part of the triumvirate that when you look at Pennsylvania, Michigan, and Wisconsin, Harris doesn't technically have to win all 3, but she really wants to win all 3. So you're going to see more campaigning, plenty of money going into the airways in Pennsylvania, and just a huge focus on Pennsylvania from both candidates.
Well, no Democrat has won the presidency without Pennsylvania since 1948. So I think they view this as a must-win state. Following the money, overnight, we got some of the details about how much each campaign is pulling in. And the Harris campaign set a record for the biggest fundraising quarter ever this fall, raising $1 billion in the 3-month period that ended at the end of September. What are they doing with all this cash?
They have some questions outstanding. I mean, they're spending it. They don't have a huge burn-through rate. Harris had an advantage even before these most recent numbers, more than $220 million raised in September. She came into September with a more than $100 million cash-on-hand advantage over Trump. The question is exactly where they spend that money, how much goes to the logistics of the campaign, exactly how much goes to the airways, TV ads, which states get that. There is, as I said, a huge focus on Pennsylvania, Michigan, and Wisconsin. It does not seem that Harris is forgetting, though, about Georgia or Arizona or even North Carolina. So there are outstanding questions about the details of where they spend that. But for now, we know, yes, there is a significant financial advantage at the end of the campaign here for Harris over Trump.
Jack, how much of that money is going toward the post-vote analysis and the post-vote potentially legal challenges that a lot of people are expecting?
You have some money left over typically in a campaign that does go to legal expenses. It tends not to be a huge percentage. If you're trying to do the math on what the effect is on an election, they're not saving up a massive amount of money. And if it gets really messy, which is a possibility with legal challenges, there could be further fundraising by other groups that try to get involved.
The reason why I ask this, Jack, just sort of putting together some of the issues, Elon Musk and sort of the payments that he was putting out there, there is a federal law that makes it a crime for anyone who, quote, pays or offers to pay or accepts payment either for registration to vote or for voting. There also are questions around the safety of campaign workers and things like Maricopa County. And there's been a real question, regardless of Republican or Democrat, and there is an increasing amount of security. You just have to wonder how much you have actual members of the campaigns trying to ensure the security or just to oversee different aspects of this that inevitably will get litigated.
Yeah, those are very significant concerns. Financially, a lot of the responsibility doesn't fall just to the campaigns themselves. Right before Congress left, you probably remember the addition of about $125 million for the Secret Service to ramp up protection for the presidential candidates. As we said, the governor of Pennsylvania has said he has concerns about the legality of the Elon Musk cash giveaway. If it's in violation of the law in some way, there may be state officials that look into it. Really, it's probably safe to say, despite the increase in a variety of costs around the logistics of the election, the fundraising advantage that Harris has is still largely going to be focused on the typical campaign maneuvers and probably won't be massively drawn away by all these other storylines.
Jack, you spend most of your time in the halls of Congress. What congressional seats or Senate seats are you most watching next week?
It's hard to narrow it down, but if I were going to name a couple, I would say that the Senate is so pivotal and so important. If Harris ends up winning, she still may have a Republican Senate. I would say the uphill battles that Democrats like John Tester and Sherrod Brown face, those are really tough races in Montana and Ohio. They need to do well there for a possible President Harris to have any chance of a real ability to follow through on her legislative agenda. So the red state Democrats are, I think, the most interesting races to watch, and I would say probably Tester and Brown are the two toughest ones for Democrats.
Hey, Jack, good to see you. Jack Fitzpatrick there of Bloomberg Government down in Washington, D.C. What did we think of the McDonald's routine over the weekend?
Mick Trump. A lot of people in the Trump world sent me his photos, excited about it, thinking that it worked. I mean, it got a lot of play across social media, these videos of him frying up French fries, there you have it, and then, in the drive-through window, taking people's orders. I mean, it was a stunt. It was a political stunt.
You don't say. Taking digs at a vice president as well, suggesting that she never actually worked at McDonald's. This is where we're at, 15 days out. We're still arguing over this.
This is the reason why I think a lot of investors are trying to ignore this, and yet you can't. I mean, the idea that, A, the customers were actually pre-selected to drive through and pre-vetted the sort of, you know, oh, it's salted. Oh, yeah, don't burn your hand, and also don't get it on your, you know, button down.
AMH, mention the numbers. The numbers matter. Outraising Trump more than 3-1 last month, the Harris campaign. The numbers are absolutely phenomenal. Yet this race is still very, very tight. Up next on this program, we'll catch up with Stephen Kirk of CFR as Israel ramps up attacks against Hezbollah in Lebanon, following the biggest weekly loss on crude of the year so far. We're bouncing back this morning on WTI and on Brent. WTI and Brent crude this morning higher by around about 1.7% on WTI, on Brent crude up by 1.4. That's $74 on Brent. On WTI, $70 and about 42 cents.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
6 weeks of gains on the S&P 500. Equity futures just a bit softer this Monday morning. We're down by 0.2%. Apollo's Torsten Slok talking up the no landing. Says the no landing continues. Gives a ton of reasons for it. Here's 5. Just 5. There were more. Pick 5. A dovish Fed. High stocks and high home prices. Public and private financing wide open. Continued support from fiscal plans. Low debt servicing costs. Locking in low rates. And the list goes on and on.
So this is increasingly more of a base case than not, this idea that where is the downturn and the deceleration if you see these kinds of earnings and expectations from the likes of banks. My question is, how much of this is priced in? And that increasingly was the tenor of a lot of the notes over the weekend, whether it was David Kostin or whether it was Mislav Mateka over at JP Morgan. We know all this. Now what when it comes to stock valuations?
It's why we've seen this push higher in bond yields. Switch on the board and turn the page and get to the bond market story. This morning, 2-year yields are higher by 4 basis points. The 10-year also up by 4 basis points. The 10-year at 4.1243. And if you switch at the board again, this speaks to crude. Once more, WTI and Brent bouncing back by 1.4%. Just breathing some more life into that trade. Treasury's lower. Lisa, yields are higher.
Everyone's looking for when will Israel respond and retaliate to Iran, which might be giving some of the lift to Brent crude. I say might be because you can also point to more stimulus out of China. You could also point to perhaps some of the growth aspects. It has been one of the more difficult trades to really fully understand in full. But this has been sort of this ongoing connection with yields and oil prices, regardless of long-term inflation trends, that seems to be, at this point, still very much in contact.
The next trade hasn't been a difficult trade. It's been a one-way street through most of this year. It's gold. It's up again this morning. It's another all-time high. It's a 5-day winning streak. Gains so far this year of more than 30%. And this came from Mohammed Al-Erin in the Financial Times today. What is at stake here is not just the erosion of the dollar's dominant role, but also a gradual change in the operation of the global system. Fantastic column out there in the FT this morning on the back of this move in gold, which has been absolutely phenomenal.
And it really draws into question whether it actually is a structural shift, especially as central banks around the world increasingly look to allocate just a little bit more to gold. And you start to think about that in addition to potentially individuals in China who don't have necessarily confidence in investing in home prices.
Mohammed talks about the fact this isn't just an inflation hedge. This isn't just about geopolitics. It's that fact exactly. Central banks around the world starting to buy more gold. Why? Issues, tariffs, export controls, sanctions. They're looking at other ways to potentially de-hedge against the U.S. dollar. And that is why you've seen this uptick in gold. And that's why, potentially, it just has only one direction to go, as you said, higher.
The grind high continues this morning, up 0.25%. Under surveillance this morning, the latest down to China. Chinese banks cutting their benchmark lending rates. The latest measure aimed at reviving economic growth and halting a housing market slump. The size of the LPR cuts beating expectations, but still within the PBOC's forecast range.
So there are a couple of questions. How much remains in terms of this year versus ahead of next year when we do have an understanding of what the outcome to the election is? But the other question here is, what's the ultimate goal of Chinese authorities? Is it to really support housing prices? Is it to put a floor under how much the economy can deteriorate? And what does it say about just how slow the economy actually has gotten? And I think that that's what people are trying to get their arms around, especially with some of the earnings that we've seen out of Europe.
I'm glad you mentioned the election, because there was this thinking before we had that stimulus from China, especially from the likes of Goldman Sachs, saying that maybe they're going to really withhold that firepower until they see the outcome. If it's Donald Trump and there's tons of tariffs, they might then want to use it. Jeffries this morning talking about the fact that a Trump win is a buying opportunity for Chinese stocks. They say, quote, the track record shows that Trump is not as anti-China as he is perceived to be. People have forgotten that Trump did a big trade deal with China in January 2020. This is very contrarian to everyone else who comes on this program and says that Trump is going to be much weaker for China.
When it comes to the equity market, I think it's really important. I came up with a phrase years ago in the last election cycle, the one before the last election cycle, the so-called presidential put. It's a presidential put. It's a different kind of story. We've talked about it around this table. If he becomes president for a second term, we know what regulates him, and it's the financial market. It's the S&P 500 or the Dow Jones. We know what it is. And that's ultimately what brought the two sides together as well, the US and China. It was market forces putting a little bit more pressure on both sides, one side more than the other, to come to a deal.
So here's the issue. Does the market force a much more easier framework for some of these tariff negotiations or trade rules, or does it not, right? Is that the same kind of regulatory force that really does rule what the former president would do in the second term?
How many times did we see during Trump 1.0, he would come out with an idea, maybe leaked to the press, maybe said on Air Force One. By the time he touched down, it was reversed or it was massaged to be a bit of a softer tone. Why? Because after he came out with that statement and places like Bloomberg News ran a red headline saying this is coming from the President of the United States, he's saying he's going to pull out of XY trade deal and markets tanked, then he realized, oh, well, that's not good for the U.S. Inc., and then he started to roll back. So to your point, he is regulated by the Dow Jones and the S&P 500. Will it work, I question, in Trump 2.0?
My favorite example of this, my absolute favorite, I think it was a month in summer, it might have been in August. Markets were having a difficult patch. And I remember the former president said he'd had a phone call with President Xi. And it was a phone call the Chinese apparently knew nothing about. And everyone walked around and said, the president's lying about having a phone call with Xi. And I was like, no, that's not the right takeaway from this. The right takeaway is that he's concerned enough about the market price action that he's ultimately come out and pretended to have a call with Xi. And all of a sudden, we thought we were going to get a deal. Do you remember this?
I do.
It's
I
absolutely
remember
ridiculous.
this so well.
It's
but
absolutely ridiculous.
It also, though, it speaks to exactly your point, which is what the main concern is. And that, I think, is what a lot of people believe that will be the case in the second term as well. And I think that that's kind of the idea behind what you were talking about.
More on this a little bit later. Let's get to the latest on Boeing and the Machinists Union, hammering out a tentative agreement that boosts pay by 35% over 4 years. Union members set to vote on the proposal on Wednesday, the same day the company is set to report earnings. Boeing is up by 4%. This is a bounce. Will it stick?
Yeah, especially given the fact that, A, we don't know whether it will be ratified. It will be ratified potentially on Wednesday. We don't know because a lot of the leaders have not signed off on it. But then what, right? How does it then figure out what Boeing looks like in 5 years? Because a lot of people think there is no way it's going to look like how it looks today.
Wednesday is going to be really difficult for the CEO. Has to come out, give this earnings call. Everyone is going to ask whether or not they have this agreement, what if their thoughts are on it. He really can't say much. And then we have to wait hours later for potentially the ratification of this deal or not. You have to remember, in September, a deal was struck between the union leaders, and overwhelmingly the workers said, no, it doesn't go far enough.
There's so much pressure on this company at the moment. Look out for that on Wednesday, I believe. Let's get to the latest from Elon Musk. His super PAC pledging to give away $1 million a day until the election to someone who signs a petition calling for free speech and the right to bear arms. Musk saying in a post on X, his pro-Trump group will pick a random registered voter in swing states to win the prize through November 5th.
And he's already done this. He's already done this over the weekend twice. $2 million checks going out to these individuals who signed this petition. Now, the question is this legal or not? Does this go against U.S. election laws? You had Governor Josh Shapiro of Pennsylvania coming out over the weekend, speaking on Meet the Press on NBC. He previously was the state's attorney general. So he didn't put his finger, his thumb on the scale too much, but he did say this is something that, quote, law enforcement can take a look at. There's going to be a lot of criticism towards Elon Musk and what he's doing on his social media platforms and the money he is piling into this campaign.
Federal law makes it a crime for anyone who, quote, pays or offers to pay or accepts payment either for registration to vote or for voting. Elon Musk is making that line very blurry. And so it starts to be really what we have seen so consistently throughout this election, which is that in spirit, maybe there's a violation, but the effort to sort of manipulate around the edges, not the election, I'm not saying an election manipulation, but the concept of legality has just been, really pushed to the edges. And that's what we're seeing in this particular case.
Pushing a boundary over the weekend, that's for sure. Let's get you the latest in the Middle East. This from Israel. Launching attacks against Hezbollah's economic stronghold in Lebanon, a day after a drone exploded next to Prime Minister Netanyahu's home. A senior Israeli intelligence official saying the aim of the strikes is to target Hezbollah's ability to function. The attacks coming as Israel weighs its next move against Iran. Joining us now, Stephen Cook of the Council on Foreign Relations. Stephen, welcome back to the program. I'll ask a difficult question to start. Do you have a base case on what Israel's response to Iran will be? Because another weekend has passed with no action. We're still waiting. What is your base case now?
Well, my base case remains essentially what it was before, that the Israelis are going to go after those Iranian assets that most threaten it, Iran's ballistic missile capabilities, its manufacturing capabilities of those ballistic missiles, as well as important regime targets like the IRGC. Although the attacks on banks in southern Beirut, this is a financial lifeline for Hezbollah, suggests perhaps that the Israelis are not going to heed the advice of the Biden administration and go after economic targets in Iran. Clearly, the Israelis are interested in disrupting the ability of both Iran and Hezbollah to operate, and going after oil infrastructure or other financial assets like they've done in Lebanon may be in the offing for the Israelis.
We do know that Biden's energy czar, Amos Hochstein, is now in Lebanon. What kind of conversations do you think the administration is having with Lebanon right now?
Yeah, I think the administration believes that with a greatly weakened Hezbollah, there is an opportunity here for the Lebanese government to begin to extend its authority into the southern part of the country. I think this is mostly a pipe dream. Lebanon does not really actually have a government. There's been some talk of having elections. I'm not quite sure under the current circumstances how to even organize elections, especially when there's not much of a central government. But nevertheless, the administration continues its diplomacy. Here's the difference between the United States and the Israelis. The United States wants a deal, and the Israelis want to win this conflict. And that's where all the tension is coming between the two countries.
When it comes to potentially Israel's retaliation on Iran, how much weight do you think the Biden administration actually has on Netanyahu right now?
Well, we've heard it before. The Netanyahu government has said, we take America's advice very seriously, but we're going to secure the country as we see fit. And if you look at this conflict as it has unfolded over the last year, every time the administration has offered their advice, pressured the Israelis to do something, the Israelis have gone about and done it the way they wanted to anyway. The Israelis have clearly come to the conclusion that they're getting bad advice from the United States. So while they're listening, they're going to continue to advance their own interests and calculate how to prosecute this war based on their own judgment.
Any clout that the U.S. had, how much did it lose, Stephen, over the weekend with the reports about a leak of intelligence around what some of Israel's plans could be?
Yeah, there's some debate as to whether this was actually a very significant breach. The fact that the breach happened is important, but whether the information that was leaked it actually reveals much about what Israeli plans are is open to debate. Nevertheless, clearly someone wants to put a break on Israeli operations. There is a sentiment within the permanent foreign policy bureaucracy that the Israelis are looking to draw the United States into a conflict with Iran, and this may have been someone's effort to prevent that from happening.
Meanwhile, do we have a sense of what's taking Israel so long? We know that they were going to retaliate. We know that they have plans. We know that there was a 7-hour meeting over the weekend where a lot of people were discussing. Is there a sense of the time frame or why there has been a delay in understanding what that kind of response would look like?
Quite frankly, I'm surprised it's taken the Israelis this long to respond to the Iranians. I thought it would be much quicker. They clearly are deciding on the best way to inflict the most damage on the Iranians without necessarily inviting a very significant response, something that the Iranians have promised. At the same time, the Israelis may very well also be negotiating with their allies in the region about how to use their airspace and how best to attack the Iranians without inviting retaliation on them. So this is a very complicated operation. Iran is far from Israel. But really, it's not a question of if, but when. And it's likely to come in the coming weeks, if not days.
Stephen, we heard from the Prime Minister's office yesterday saying Netanyahu reiterated what he also said publicly. Israel takes into account the issues the U.S. administration raises, but in the end, will make its decision based on its national interests. This was in response to not speaking to the President of the United States, Joe Biden, but speaking to the Republican challenger and candidate, Donald Trump. Is this appropriate?
Well, it really is quite extraordinary that you have the Israeli prime minister talking with the Republican candidate about Israel's national security and the U.S.-Israel relationship. It's clear that Prime Minister Netanyahu has long felt more comfortable with Republican presidents than he has with Democratic presidents. Although this isn't to suggest that he had such a smooth relationship with President Trump. One of the things that we learned from Jared Kushner's memoir is that the trust deficit between President Trump and Prime Minister Netanyahu was quite significant, perhaps not as significant as it was between other presidents and Prime Minister Netanyahu, but nevertheless, it was a problematic relationship.
Hey, Stephen, appreciate your thoughts, as always. Stephen Cook of CFR. Wasn't John Kerry accused of shadow diplomacy with Iran a number of years ago?
Yes, when the Trump administration came in and they were trying to salvage the nuclear agreement. Lines get blurred, especially in election years before or after U.S. presidential elections, and he got a lot of criticism for that.
One thing that's super concerning to me that we haven't covered enough, and I think we should do in the coming days, reports of North Korean troops going to fight Ukraine. That is one heck of an escalation.
Two things stand out to me. One, again, not very appropriate, but two, how depleted is the Russian military and army and their defense posture if they're having to rely on North Korea to send in troops? We know that Kim Jong-un and President Putin have a very close relationship, but this takes it to another layer, another level of the coordination between these two.
Well, and it raises this question, and I'm glad you bring this up, about how close that nexus is of Russia, North Korea, and Iran. How depleted are the forces, to your point, Anne-Marie, with what's going on in Ukraine and Russia, to really distract from Iran, or is this really becoming an axis unto itself?
Getting much closer over the last few years. Crude is higher this morning by 2%, WTI $70, Brent crude $74.34. With an update on stories elsewhere, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. Vice President Harris sat down for an interview with Reverend Al Sharpton this weekend. She was asked about the former president's, quote, street talk on the campaign and use of vulgar language to describe her record as vice president.
What you see in my opponent, a former president of the United States, really is, it demeans the office. And I have said, and I'm very clear about this, Donald Trump should never again stand behind the seal of the President of the United States. He has not earned the right. He's not earned the right. And that's why he's going to lose.
Harris predicted that Trump's lack of decorum would be a disqualifier with voters. T. Rowe Price says 10-year yields will test 5% in the next 6 months. The firm's CIO of fixed income, Arif Hussain, made the call in a recent note, pointing to rising inflation expectations and U.S. spending. Hussain said the ongoing issuance by the Treasury is flooding the market with new supply, pressured further by the Fed's balance sheet reduction. Bitcoin, meanwhile, flirting with $70,000. Data compiled by Bloomberg show that the U.S. spot Bitcoin ETFs lured almost $2.4 billion of net inflows in the 6 days through October 18th. The rally is in part due to bets that U.S. crypto rules may become friendlier after the presidential election. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, calm before the election storm.
You're going to have ongoing, very high deficits, regardless of the outcome of the election. But the trade part of this, the risks around the global trade war, domestic impact in the US and the international impact does affect, everything.
That's next on the program, live from New York. You're watching Bloomberg TV.
About artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better
insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Session lows pulling back from all-time highs on the S&P 500, just a little bit softer. We're down here by 1/3 of 1%. Under surveillance this morning, calm before the election storm.
Very consequential, I think particularly around trade, on the fiscal side probably. If it's going to be divided Congress, you're going to have ongoing, very high deficits, regardless of the outcome of the election. But the trade part of this, the risks around the global trade war, domestic impact in the US and the international impact does affect, everything.
So here's the latest. Global finance ministers gathering in D.C. as the IMF's full meeting kicks off today. Foreign leaders bracing for the outcome of next month's election. Nina Richardson of ADP saying the U.S. economy in particular is still on stable ground, writing the last 5 years have primed us for jump scares and drama when it comes to the economy. As we enter the last 3 months of the year, reality is a lot less exciting. The economy is on a steady march, refusing to be tripped up by even remarkable events. Nina joins us now for more. Nina, good morning to you.
Good morning.
Where does that boring stability come from? What's leading to it?
Everything. If you look at the labor market, it's stable. If you look at business investment and corporate profits, they are drama-free. If you look at the consumer, they're spending like normal. If you look at every sector of the economy, maybe save manufacturing, the economy is performing as it normally would. And that's really important now because inflation is still too high. That's one reason. But the second reason is there's still a big segment of consumers who had negative real earnings for a very long time. And they're just getting back. And that's why, despite a very boring, pretty solid economy, consumer sentiment is so bad.
One reason why people don't like boring is because it doesn't last. And there typically is a pivot point in there where things get too hot or too cold, especially at a time where we don't understand what the neutral rate is. How do you understand how close we are to a pivot point one way or another?
Well, the first place I look is the labor market. So I'm kind of talking my book here. I have a lot of labor market data. I'm going to say that freely. I admit that.
Okay.
I'm basing it on the fact that, I have a data set at ADP that's 20 million workers or 25 million. So when I look at the stability of wage gains, I see an economy that continues to hire a little bit better than it did a few months ago, but not the surge in hiring that you might expect after you look at that September jobs report, which was the most exciting data point probably of the year. But even if you look at other indicators of the labor market, if you look at initial jobless claims, after those back-to-back hurricanes, we saw them tip up. Now they're on their way back. If you look at the stable pay insights data that ADP produces, very, very moderate gains. So adding the labor market all together with pretty normal unemployment rate, you see an economy that continues to march along just fine.
I guess another way to put this is during the pandemic, the balance of leverage seemed to shift to the workers from the employers, this idea that they could demand more. Where is that balance of leverage now at a time where we're waiting for the Boeing strikers to vote on whether they will agree to end the strike on Wednesday?
That balance has shifted back to the employer, in my view. You see, first of all, that workers are not leaving at the same rate they did before. The quits rate is down. People are not turning over as quickly. If you talk to any company, they're saying that people are staying put. And when people don't move, that means that the employer has the advantage. We see it in our difference between job changers and job payers. That growth has narrowed. These other strikes, I think they are also strikes not about the present, but about the future. You see underpinning all of these is something about AI. And so really workers are trying to position for the present and for how their jobs might change in the future all at once.
We saw that in the ports as well, with those workers concerned about that. You talk about in your research, it shows that employee sentiment dipped in October. Are basically people just boring and chugging along because they're waiting for big outcomes like the U.S. election? Are people on the sidelines?
There is a hesitancy, I think, in terms of making a move. And you see that typically in election years, but this one, since it's so close to call, I think there is a hesitancy for employers and for consumers, but also it's the Federal Reserve. There's a hesitancy there. People are waiting to make big decisions, and we'll see that in the durable goods, these expensive big ticket items that you might have to get a loan for or put on your credit card. People are hesitating to see where interest rates are going to go. And so there is not just domestically, globally, reasons for uncertainty. Getting back to your point that, you know, when things are boring, people don't trust it as much. You're waiting for the other shoe to drop, and I think that's pretty true of this economy as well.
You can sense the anxiety at the moment. Nita, it's good to see you. As always, thank you. Nita Richardson there of ADP. Up next on the programme, Stuart Kaiser of Citi, Adam Posen of the Peterson Institute, Javier Blas of Bloomberg Opinion, and we'll catch up with Terry Wiseman of Macquarie. Live from New York, the second hour of Bloomberg Surveillance. Up next.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issues, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
DOJ or other authorities
Could face bigger challenges next.
Was going to keep rain World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley.
countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
What's really, truly in the driving seat is the fact that the economy is resilient.
The scenario that we still have in our outlook and what we discussed is a plausible re-acceleration in the economy.
The Fed needs to continue to move cautiously.
I absolutely would not rule out 50 basis points for December.
The Fed's job is not yet done.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance starts right now with equity futures pulling back from all-time highs. On the S&P 500, futures negative by 1/3%. No real drama here. Around session lows. On the Nasdaq 100, we look like this. We're down 0.5%. On the Russell, we're down 1/3. The data has been much better than expected over the last week. Jobless claims, retail sales with a big upside surprise through last week's trading sessions. And then this week, things get a little bit quieter. You've got a beige book, got IMF World Bank meetings, some UMich sentiment on Friday. Earnings pick up a little bit with GM and Tesla. It's the calm before a very, very busy few weeks with payrolls a few Fridays away, an election on November 5th, and then a Federal Reserve decision on the 7th.
I love it. A calmer week. You've got the beige book. What else do I have to say? I'm leading off with the beige book, but you are correct. It is the calm before the storm, which is a reason why, even amid all the good economic news and earnings that actually are supportive of strength, at least in the near term, there's a real question about how durable it is. And that's the nervousness that you're seeing in the market. And that's the nervousness that you really heard in a lot of the commentary over the weekend.
Good news is good news until 450, 475. Not just mentioning random in numbers. I'm looking at the 10-year. Yields right now at 412. At what point does good news become bad news for this equity market?
We have no idea, but people are talking about 5% 10-year yields over a T-Rowe price, and you have to imagine that there is expected volatility in the bond market on the heels of the election, and at what point does that crimp some of the returns in equity markets? Goldman Sachs' David Kostin talking about for the next decade, you could see 3% annualized returns in the S&P